Yes. I welcome you all on the auspicious day of Akshaya Tritiya today. So wish you all happy Akshaya Tritiya. And I feel we are fortunate that we have with us our past president CMM Chitale sir and our past chairman CA Atul Bheda sir. So please welcome him with good round of applause. Today is the second day of our seminar. So how was yesterday? बहुत कम आवाज आ रही है. Yes, so you have enjoyed yesterday and today will be superior than yesterday, I can say. Today is right now it is a panel discussion session. And one more thing I want to highlight, that I hope you have enjoyed all photograph of yesterday. You all had scanned barcode, na? So if you have enjoyed your photograph, you liked it, please post in your social media hashtag WIRC and appreciate AI technology and initiative taken by our WIRC chairman, Arpit Kabra. So do that. And one more thing I want to highlight, that this camera, what you had seen now, you are seeing, this is initiative taken by the WIRC also, that you all the program will be live, you can watch live, but after registration, not before registration. After registration, you can watch live. Why I'm saying that? Because from 1st April 2023, for virtual, you will get only unstructured CPE. For structured CPE, you have to presence physically. On your virtual presence, you will get unstructured CPE from 1st April 2023. Okay. So if you only want to see or watch the event, you can register yourself virtually. If so, and after that, now I don't want to take much your time, and I want to introduce for you CA Sandeep Jhanwar sir also, who is the panelist, and CA Karishma Mavani, who is the moderator of our session, and our chairman CA Arpit Kabra. And I request Arpit to give a memento to our panelist CAMM Chitale sir first. Now I request Chairman sir to present memento to CA Atul Bheda sir. CA Sandeep Jhanwar ji. And CA Karishma Mavani. So I would like to introduce before you Karishma madam. Karishma is an associated partner with Pride Waterhouse and has post-qualification experience of 20 years. She has worked in different functions over the year and a regular speaker in various forums. She has done various courses of IIMB, INCD, SED and NSC. She is also part of various committees like Ethical Board Standard and subgroup in ICAI. She also works on various positions, appears white paper for various regulatory bodies like SEBI and NFRA. She has engaged with a wide spectrum of financial services client, including bank, mutual fund, asset management company, private equity, and insurance during her career. In Price Waterhouse, she was also part of the core team in India responsible for setting up the quality management system and real-time review program. She is also actively engaging with PwC Global Network and the India leadership. The team was responsible for developing and introducing several good practices in the audit system. She has also performed quality review in various countries, which included Ireland, Israel, Egypt, Lebanon, Bahrain, and where she got great review from these countries. And she is handling inspection program in assurance risk practice, where she is involved in strategic initiative like transform risk program of the firm. Given her varied experience, Karishma is regularly tapped to conduct the facilitate various training program. Her contribution over the year has been well appreciated, and she has received several commendments for her work across firm. With this brief introduction, I request you all to welcome CA Karishma as the moderator of today's session. And Karishma, I would like to request you to introduce our panelist of the day. Thank you.
Thanks. Firstly, thank you, WRC Chairman Arpit and Pinky ji. They always do this to me last minute. Okay, but in fact, I take this as a great opportunity to introduce our esteemed panelists. And I'm quite humbled today, sitting before, and I'll start off with a person whom I learned audits from, Chitale sir, right, where I started my career before Pricewaterhouse, right? So he has a big list, but I think, he's cautioning me on the time since we've, he's very particular about time. Let me at least dig out a few but great accolades which he's achieved. We all know him as a past chairman of ICAI, and he's also been a central council member of ICAI from 85 to 98. He's been the chairman of WRC from 84 in the year 84-85. He was a member of the International Audit Practice Committee of the International Federation of Accounts during 98 to June 2000. He is also a member of the PMAC committee, which is one of the two topmost committees in SEBI. He's a member of the advisory board on bank, commercial, and financial frauds, appointed by the Central Vigilance Commission from July 2007 to June 2011. He has been a chairman of NACAS, which was constituted by the government of India from February 11 to February 13. Oh my God, the list is endless. He's a chairman of the Standing Committee on Accounting Issues constituted by IRDAI. He's also been the chairman of Principal PNB Asset Management Company and serves as an independent director on the boards of L&T Infotech, Atul Limited, SL Propac, Astrec, RR Cable, ONGC Petro Additions, and Loda. List doesn't end here. He has also worked as an independent director on big boards. I'll name out a few. He's just asking me to stop. So ONGC, IDBI, LIC, SBI, Citigroup Global, Foseco, L&T Insurance, and the list is endless, but I know him as an amazing human being, right? He's also involved in a lot of social activities, which many of you don't know. Which is remarkable. Thank you, sir, for being here. Another person whom I admire, he doesn't know me, but whom I admire a lot. He has also been a CCM of ICAI from 2007 to 2013, Shri Atul Bheda sir, chairman of WRC of ICAI 2001 and 2. He has also done diploma in genealogy from the Mumbai University. But I think what is remarkable, is his humility, which from my whatever interactions which I've had with him. I think we also in July 2022, right, Yes Bank was handed over back to the shareholders. It was in deep trouble. And there he was appointed by the government of India in March 2020 as part of the 3-member team to revive Yes Bank as a non-executive independent director at Yes Bank. He was also the audit committee chairman of the bank from March 20 to July 22. Like, in spite of Corona hitting us in the last 2.5 years, Yes Bank was put on path for revival to survival, and the turnaround happened. In the first year, when he took over in March 2020, there was loss of approximately 22,000 crores. And by the third year, the turnaround was made, and for 31st March 2022, there's a profit of 1,100 crores. That's remarkable. Uh, Indian banking industry has always had a great challenge, and first time in Indian banking industry, a bank is revived. Otherwise, the banks were merged with other strong banks. It is a huge challenge, and it will always remain the huge challenge given the current regulatory environment. But he, along with the other board of members and 24,000 employees, were able to fulfill the huge responsibility casted on by the government of India very, very successfully. Very inspirational, sir. Another thing is he's a person with strong interpersonal skills and ability, as I started off, to get along well with people. He always loves taking challenges and always looks for creative solutions to problems. He has a very strong values and ethics, and he believes in strong relationships because people come foremost in our profession. Thank you, sir, for being here today. Over to you, Sandeep, right? We were, in fact, today morning interacting on various things. And of course, he being the member of the Institute of Chartered Accountants of India from 1998, he got AIR 44 in his intermediary exams. He is currently a partner with MGB and Company, and he also holds independent directorships on various boards, including Rama Ratna Vyas currently, which is a BSc listed company. He's also actively involved in modeling of business entities to support fundraising, mergers, demergers, and acquisition. His firm is currently the Central Statutory Auditor of Union Bank of India. After completing 20 years of practice as a CA, he has been involved in various matters, right? But I don't want to say jack of all trades. He is definitely a master of all, which includes taxation, audits, valuations, consultancy, indirect tax, etc. And what is interesting about him is his keen interest in ancient Indian epics and has studied Ramacharitra Manas, Mahabharat, Srimad Bhagavat, and Srimad Bhagavad Gita. He has also learned by heart 2 chapters of Srimad Bhagavad Gita and delivered various lectures on relevance of ancient Indian epics in life management. Welcome, Sandeep. So with that, after taking a pause, let me start with the topic of today being role and expectations of a internal auditor from the management, right? And let me start off with Chitale sir. You have been on boards of various companies, right? And you would be seeing various kinds of audits happening there, right? It could be a process audit, internal audit, and bank world, concurrent audit. There's now ESG audit, etc. And then, of course, statutory audit. So you have like 6 blind men and an elephant called the statutory auditor, giving various reports to you. Right? Do you think like all the reports which are given to you as a board member, right? Does that really, are they effective? Are there a lot of duplication of efforts there? Or what would you like to see when you're donning the hat of a board member and audit committee chairperson, sir? Over to you.
Good morning. Can you hear? Yes, thank you. I think before I begin, can I make some understanding of people who are attending? How many of you are in industry? Thank you. And how many of you have been independent directors somewhere or the other? Thank you. Thank you. I think this is just to get a perspective of those who are listening, because that makes a big difference in terms of what we are talking. The question is that as a chartered accountant, normally we love the word audit, but if you remember the name of the institute, it is the Institute of Chartered Accountants of India. So it's an accounting function which is primary. We learned auditing and therefore we keep on talking about auditing. Now, even in auditing, if you look at various aspects, concurrent, internal, and many other aspects, sitting as a board member, what is it that you expect from internal auditor? I think that's the first point. A lot depends upon what kind of scope the board through the audit committee has given to the internal audit. So let's be very clear that it is the board which through the audit committee gives the scope of internal audit to the internal auditor. Now, when you say internal auditor, at few places it is the chief internal auditor appointed by the company as an employee. At few places it is a practicing firm which is doing the internal audit. And at many places the word co-sourcing, joint sourcing, various English words have come in, which means that the company has got somebody inside who is in charge, but he is supported by practicing firms, maybe 1 or maybe 10. I think that's the kind of circumference in which we work. Now, if the scope of work given by the audit committee is not sufficient, you will not get what you desire to have. So I think the first responsibility is always that of the audit committee to identify what kind of scope of work you will give. What happens when the scope is not given was very prominently brought out by the oldest case of Satyam. Let's forget the earlier cases. And therefore, let's come to that first point. The audit committee is responsible for identifying the scope of work has to be given to the internal audit. Now, by and large, there are two ways in which internal audit is done, either transaction oriented or system oriented. Each audit committee chairman has his own preferences, and therefore people keep on talking on both sides. But I think a combination of two is what is required. There has to be some transactions audit on the basis of which you can establish whether systems are in place or not. Simultaneously, the systems have to be in place. Otherwise, doing only transaction audit does not give you results. I'm just trying to cover in a very broad sense what way one can tackle that. The other subject that one has to remember is the internal financial control, and that is IFC and ICFR. IFC is internal financial control and ICFR is internal control on financial reporting. Now, those who study the subject can understand that these two can marginally make a big difference. However, for the audit profession, since the institute in the guidance note has equated the two, the life has been made easy. Those who have studied the guidance note can understand what I'm trying to say. Having said that, IFC or ICFR is very relevant from the viewpoint of internal audit. And therefore, for every company, if you're sitting as an independent director, first point that you should know is the internal financial control within the organization proper? Within that, are you working on the internal audit properly? And what are the reports that you are getting? I think in a very broad sense, that's how I would divide the whole topic, or I would look at the topic. There are many companies who would mix the internal audit and IFC so well that people start forgetting the difference. But I think difference has to be kept in mind. Of course, depending upon the size and the nature of the organization, sometimes it is decided whether there should be two separate functions or there should be one function. But if I visualize a very large corporate, then I think IFC has to be headed by one person and internal audit has to be headed by another person. I've seen some companies where the IFC, which is tested by the internal auditors or somebody inside, gives a 99% good positive results. But in the same year, the internal audit brings out issues on all aspects which are covered by IFC. Now then normally I ask the CFO, please explain these two things. If your IFC is so strong, how can you have observations coming out of transaction testing in the internal audit to such an extent that there is a risk control matrix which is seen to be not complied with in many aspects? So I think if you are sitting as an independent director, what is it that you should look for? I think that was the starting question. I just thought of giving the circumference in which you have to look at the subject. Now let's come to the reports per se. So if you're looking at the IFC report, I think the way of looking should be different. Then you should be able to identify whether the risk control matrix have been identified properly, how many transactions have been tested, which is the period in which the transactions were tested, and the company law requires you to ensure that even if there's a problem in the middle of the year, at the year end, it is taken positively. So many organizations, even if they have issues, they would ensure that as on 31st March, the issues are closed. But that by itself does not improvise the IFC. It only says that we have a problem, but we have sorted out the problem at the year end. So if you're looking at the issues on IFC report, you must look at the transactions throughout the year, not only at the end of the year, whether risk control metrics are properly identified, what percentage of transaction is seen, and from year 1 to year 2 and year 2 to year 3, have there been improvements? I think that's the way one should look at the report on IFC. Report on internal audit, it will depend upon what kind of instructions we are given. Is it a system-based transaction testing or it's only transaction testing? And I think lastly, because it's a panel discussion, so let me not take the whole mic. There are some firms which give only PPT presentation without actually giving the report. And there are some firms which only give lengthy reports but not PPT. I think in real life, what is required is a combination of two. A PPT is a matter of presentation to the audit committee so that they are not burdened to read the word by word report. But a report is writing duly signed by the authority to whom appointment was made is a necessity. If there is no signed report, I think as an independent director, you are not fulfilling your responsibility to ensure that you have obtained the reports. I think that's how I would look at the reports of internal audit. Right.
No, so very well articulated difference between IFC and internal audit. I think there is a clear demarcation and we often forget that. But, that reminds me 10, 15 years ago, right? I was doing a similar panel and we were talking about the same topic, in terms of, and there we said that technology is going to be the future, right? Now when I look at it, technology is given, right? But let me take views of Atul sir, yours, right? We are living in this VUCA world, right? A very volatile, and the regulatory landscape is changing, right? And when we hear the regulators also, they are just talking about technology, right? So do you think as internal auditors, we are really able to catch up, right? And these new words which we are hearing, AI, RPA, the next gen tools for data analytics, etc. Do you think we are geared up for that? Or what do you think should be the next steps?
Yeah, first of all, I'll also join Chairman and Chitale sir and wishing all of you an excellent day, a very auspicious day today. Wish you all the best for that. Both chairman and the team has left. So I'll thank them for inviting me, making us the panel on this panel discussion. A very interesting thing has already been started, and none other than Chitale sir, when he is talking about the things, all of us have heard him when we were also very young. And since then we have been hearing him. It is a pleasure hearing him and always understanding something new with a different viewpoint. I think so. With that, coming to the point about the changing phase of internal audit function per se. So for years, it was, if I talk about internal audit, it was probably a compliance-centric approach which was being followed, which gradually now, if I see on the board the internal audit department, I would see it as somebody who gives an excellent input, and whereby at the board level, you try to make them as a trusted business advisor. That is how I can put it. Now, this change can happen only and only if this department, maybe internal or external, has been continuously upgrading itself, because the way the businesses are conducted, the pace at which the change is happening is something absolutely unparalleled. So in olden days, we used to say the generation gap was 25 years, which came to 15 years, which came to 7 years. Today, if the two siblings have the age difference of 5 years, they are called from different generations. So that is how the technology has also been running. If I talk about technology, maybe Chitale sir, when we started using computers, we means when I started, he must, at that point of time when you started, there were no computers. And I remember, doing articles, the technology was so bad, the calculators was not there. We had to use that facet machine where you just put it and you just, do it. And that is where it started. And when we became CA, maybe the computer started, where you had two different drives, where one had an operating system and other had the data. And that is how you started. And then XT80, 286, 386, 486, Pentium, whatnot. That is how the technology has, moved in. And if I talk about technology, always all of us try to have latest technology, and that latest becomes outdated in 6 months. This is the practical thing. So when we talk about technology, I think the skill set which is required for the internal auditor has been very, very dynamic. It has to be continuously changed, because, and if I talk about today, the data privacy, we talk about security, we talk about automation, we talk about cloud adoption, we talk about after our COVID, remote working, where all of us have, done that. And just imagine in this sort of situation, see the dynamism which the internal audit has to, go through. And we as a chartered accountant, we are expert as far as, going through this process, because a few years back, I think in 2010-11, MCA 21 was the first project which was started. And at that point of time, none of us, had more than one computers in our office. I'm talking about the SMP practitioners. And today, we have more notes than the number of people working with us. See the change which has happened. And all of us have adapted to that change. So if I talk about the internal auditors, I think most of the internal auditors are capable of adapting to the change by whatever challenges which are being faced. As far as when we talk about, I think you talked about some high-end softwares so that is depending on that what type of organization I am working into. The tools, it could be like data analytic tools, or it could be robotic process automation, RPA. These are the tools which many of the auditors are using it. And naturally, one of the most important tool which all of us are using is Excel, and master in Excel really works a lot. If at all we are into audit, जो काम 5 दिन में अगर हम manually नहीं कर पाएंगे, वो 5 मिनट में हो जाता है. So that is the trend which is there. And this, whatever latest tools which are available, the internal auditors will have to go by the pace which the technology is developing, because they have to answer to huge number of stakeholders. It could be internal stakeholders as well as external stakeholders. And it becomes very, very important for them to become concurrent, if at all they want to keep the things happening the way people wants to, look into that. Now, when I talk about these tools, they enable the auditors to analyze large amount of data more quickly, more accurately, and also more efficiently. If I talk about data analytics, they help in analysis of the data, and this will be really helpful in understanding the data quickly and efficiently. Also, it identifies the trends, it identifies the patterns, and any sorts of, I would say, some irregularities in the financial books. It becomes very easy for the auditors to find out. And if I talk about RPA, they are an automated routine things which are there, like regularly appearing, where like data entry or our reconciliation. This would where the human decision making process is late, which is very, very less there. This sort of things are being used by the various internal auditors. Yes, this would again depend on the size of the institution, the complexity of the institution, and most important, the maturity of the internal audit department and the audit committee and the board. The tone at the top is very, very important, because as Chitale sir said, what is the scope that you are giving to the internal auditor? That is very important. And along with the scope, I will add to it that what is the type of authority and accountability which you are giving to the internal audit department. Because this department for the board is very, very important. For the audit committee and the audit chairman, it becomes very important, because they are eyes and ears of the audit committee and the audit committee chairman, whereby they give a lot of input, provided as an audit committee, you have to protect them. Because what we have seen is this internal audit team is literally fighting with each and every activity in the company. Because what is their role? Their role is to go and find the faults in whatever is happening. And naturally, nobody would like the person who finds faults with himself. So internal audit team is somebody who is not liked by most of the people. Because in company, whenever an internal auditor goes there, people will feel, ye apne galti nikalne aa gaya hai. And therefore they are not liked. But if you have a very strong support from the top, I think they would be really giving a wonderful job. And along with this, you require to give two things. When you talk about technology, a lot of softwares are required, and also people who would be there, because always they are shortage of people, because the effective team members are not found. Huge shortage of team. So this particular technology part of it, I'm sure the adoption is happening. And mostly what we have seen is the head of the internal audit departments are mostly chartered accountants. The team is also comprising of chartered accountants. And what I have seen, the adaptability is very huge, and they are really changing very fast. At the pace at which the technology is changing, they are also changing.
Thank you so much, making this complex subject so simple, sir. But, and this is getting very interesting. And let me turn around to you, sir, in terms of, both of them donning their hats as independent directors. You've been on the other side as an internal auditor as well, right? And you also see it's not just the board, but there's an expectation gap today, what we see in terms of what auditors are expected to do and what really the board or the regulators require you to do. So do you think, thank you. So how do you manage that expectation gap, or do you even think there's a gap?
So good morning all. It's my privilege to be here amongst you all, and especially sharing the dais with Chitale sir. I've shared the board with him. It was my first experience, and when he used to speak anything, it was last and final. But today I think he has kept some room for the other panelists also. So the question which is put forth is expectation gap. So we have been listening. When anything happens in the market which moves the market somewhere, the first finger comes on the auditor. Any fraud has happened, any misleading information has been given in the financial statements, and it comes out, then first finger would be at the auditor, what the auditor was doing. So we have our own explanations that there are certain inherent risk, inherent features because of which we could not find. So it may happen or may not happen. But the question is that, what does the public expect from us? See, any profession, the heartbeat of the profession is the public expectation. So if public expect us to give something, to do a work in a particular manner, so we have to ascertain our methodology, our working in that fashion. Sometimes what we do, for a particular transaction, if we examine that, whether it falls under the accounting standard, what our standard of auditing are saying about examining that transaction, all those we study, and something get bypassed out of that. So, but all these regulations, maybe accounting standard, maybe company law, or maybe the auditing standards. Those standards come later, and first comes audit. So whether in audit we are expected to do something, check a particular transaction in a particular manner and to report a particular transaction in a particular manner, it has to be reported in the public interest, in the interest of all the stakeholders. And these days, when the stakes are getting high, the volume of transactions are getting so high, and the nature of transactions being so complex, we have to be very particular about examining the transaction, about the sampling and everything in the audit. Sometimes what I find that we work as a team in an enterprise for auditing. The signing partner may not get much time to spend on the transactions. So there is a big gap in the performance, in the manner of performing the audit. The persons who are actually working on the transactions, they are not responsible for reporting. They are reporting to their seniors, but they are not responsible for reporting. So how do we structure our team? That is very important. The team works for us. The team do not have, there may be some independent responsibility on them, but the ultimate responsibility would be on the person who is presenting the report to the stakeholders. May it be signing partner, or may it be the board members or anybody else. So the stake involved, the responsibility is on his shoulder, and he doesn't get time to lay hand on the transactions. He doesn't have proper, he may not be giving the entire time on the transactions. So that is the gap. So it is important that how do we train our team to articulate the particular audit function. See, there are lots of trainings in the audit firms these days, but what I am finding that the person who is training the trainees or the managers is not the person who is actually responsible for the audit. The trainers are different and the auditors are different. So it is making a big difference. There is gap of expectation from the team as well. The manager is not getting the fundamental observations from the audit team. Then he cannot satisfy the persons above, the signing partner, or then the signing partner will not be able to satisfy the audit function as well. So that is a gap we need to work on, because you asked me the question from the auditor's point of view. So what problem I also face, because there are always timelines in the audit. I need to complete one audit yesterday and today, in fact, and today this program came. So I completed it yesterday without adequate information, which had to come to me by yesterday. But now I'm doing that on May. So this happens with everyone. So audit nowadays, it is a serious profession. It's not just like, see, we are auditing 20 files or 30 files or 100 files, or it's a serious profession. Each and every team member has to be trained in a manner that he becomes our eyes, ears, hands, legs, everything. So that particular function is important, and because of we are missing something there, and that is why there is a gap which the stakeholders, we may justify something that because of this reason, we could not find out this, because of this reason, we could not find out this. But as an auditor, we know if something wrong is happening in the company, in the enterprise, we must be knowing that. It cannot be some lax amount, some frauds by some employees that may go, but something big, which is substantial, which may erode the capital of the company substantially, that cannot be that cannot go out of our eyes if we are auditing in a proper manner.
No, so thank you. So then let me come back to the fundamental question, and if all three of you could in your own hats throw some light to it. What, in your view, would an ideal internal auditor be or should do? How is it different from a statutory auditor? So if you want to take it up first. I mean, anyone.
I'll just start this because after him, I cannot speak. So, so statutory auditor and internal auditor, the difference, if it has to be very brief, then statutory auditor, we all know, it is a factual statement that what is the financial position of the company and what is the profits of the company, whether those are stated properly or not, true and fair view, whether they are giving. But in internal auditors, with the changing environment now and with the enterprise risk management of which the internal audit is a substantial part, all those things are coming. What I think internal auditor has to report beyond the transactions and have to go beyond the transaction and has to report what should have been. It is beyond the factual aspects. What is the financial reports? Beyond that, he has to report the enterprise should have functioned in this manner, given those resources. So in that direction, the internal audit function is going towards that direction. On a lighter side, earlier, when I started my practice with my father, then if some internal audit assignment used to come, then the fees quotation, we would have seen the statutory audit fees, and then it should be 50% or 25% or 30% of the. So nowadays, that has changed. In the morning, I was discussing with Chitale sir. So what he said that internal audit is not dependent only on the chartered accountants. Means if one factory is to be audited, it can be audited with the in charge of the other factory person. So in that kind, internal audit function has to be performed. So nowadays, I am seeing the internal audit fees are much more than statutory audit fees, because the involvement of time is much more than what the statutory auditor are performing, are involving in the performance of the statutory audits. Thank you.
So the fees for the internal audit should be more or less than the statutory auditors.
It depends on scope, but
just on a lighter note.
If we see at the function overall, then it is the efforts those are to be put in are much more than the statutory audit.
So, okay. So your views on what do you think an ideal internal auditor should do?
Quickly, 2 or 3 things. First is when Atul said about computer, etc. I was reminded of my first day of articleship, long time back. That time there used to be a telephone you call it directory. I don't know how many of you have seen that. And my manager was very strict. He gave me one page of a particular directory and he asked me to make a total. I did the total and told him the total without even looking at me. He said it's wrong. Now, I was quite confident of my mathematics. So I said, hey, son, it is right. He said, no, please do it again. I had done the total. So I came to the same figure again. And they said, okay, you can go. Now, that's the kind of mathematics that people who have not seen the computer calculators have been used to. Sometimes it's an advantage because then I don't necessarily depend upon the calculator to do many other things. First point. Secondly, I think about, that's the question which is asked, internal audit, statutory audit. See, I think issues are being rightly brought out that now the teams have to be trained. If trainers are not actually people who have done the audit, then how can they do that? It will be like today, all three of us are talking on this subject. If we have not done the internal audit, or if we have not been independent directors, we can't be speaking on this with experience. I think that's the right point brought out by him. Therefore, what needs to be done is that the team has to be taught properly. I think one more thing which I have noticed in practical life is that a team would normally consist of even article students. Now, in the younger age, they need to be told how to speak. When they go and start speaking to somebody who is a CFO or a manager, and at the age of 18 or 19, they start speaking like this, the manager understands how to deal with that boy or a girl. So I think the body language, the communication, the English, now English is a problem. I'm not saying English is my mother tongue. But if English is the language through which I communicate, I must teach my students how to speak in proper English. Otherwise, then they go there, sir, ye kya kaise kiya aapne? Ye galat hai. I mean, if the article clerk starts telling the manager ye galat hai, so then the whole impression about the firm goes down. So I think if we are in practice as internal auditors, our messengers are our team. So we will have to ensure that the team communicates properly. As far as the ultimate scope or ultimate work is concerned, I think in all large corporations, now the responsibility of internal audit is becoming quite heavy. The teams are not only chartered accountants, they would have engineers, they would have many other people who can actually understand the nature of business. So if as a firm you are doing the internal audit of a very large corporation, you will have to understand the expectations from the independent directors or the audit committee chairman very clearly. Otherwise, if we keep on concentrating only on the financial aspect and we don't touch upon the business aspect, we may not be able to justify our continuation in that kind of situation. So I think in short, the expectation from internal auditor have changed quite substantially. It's a business transaction for which analysis is to be done. Systems have to be reported. Are there any shortcomings in the system has to be pointed out? And then whether a particular transaction is recorded rightly or not comes up. So bringing out accounting mistakes through internal audit is practically gone by now. That may be the scope in a very small to medium sized companies. But in all large corporations, I think with ERP, SAP, other system being there, that's not the scope. It's not even expected. And having talked about the scope in the beginning, let me come to that topic again. Every audit committee at the end of the year must ensure that just as you look at the budget and you look at the actuals, for the internal audit also, you should look at the scope which was given. And at the end of the year, whether the scope was complied with properly, whether the report was properly issued, and that has to be seen. And I think if some of you are doing internal audit in an organization which is monitored by regulators, like mutual funds, banks, insurance companies, you need to know what to write in the internal audit report. Now I'm touching a very difficult subject, but let me try and deal with that. If you are doing the internal audit of a bank or insurance company or a mutual fund, let's keep aside the concurrent audit of a bank because that's a subject which is in a public platform. I can't say more, but that's of a different type. So let's keep out the concurrent audit of a bank. So I'm not talking on that subject. I'm talking internal audit of a bank, insurance company, mutual fund, or a regulated agency. What you write is a ready-made material for the regulator to pick up when they come for inspection. Now that's the point which you must keep in mind when you're writing your report. I do not mean to say that don't write the report. You must have the skill of communication with the management, the audit committee about the points that you have brought out. Because end of the day, we are an instrument to serve the company's interest. And when I say company, I'm saying companies are larger than the management. Company is not equal to management. So if we keep that in mind, automatically we get the skills of what to write, how to write, when to write. And I think all these are very important in terms of writing the internal audit.
So, as usual, very well articulated, sir. And now we say soft is the new hard, right? The soft skills play a very important role. Hard skill, we all are chartered accountants sitting here, right? So we all have the technical skill sets, yes. But I think in today's world, soft skills do plays a very, very important role. But would like to, before we get into the other, would like to hear from you as well, sir.
Karishma, I would look at this question, when yesterday we were discussing about statutory auditor, internal auditor in the changing regulatory scenario. I was just, trying to do some research on this changing regulatory scenario in last few years, because what we have seen, the frauds, etc., have been, coming up in a very, very big way because of various reasons. I'm not going into the reasons for, but how the regulatory changes have happened because of this, and the role of internal and the statutory auditor is also changing based on this changes in the statute. And when I'm talking about statute, I just got some detailing where I could see in last 4 or 5 years there are various changes which are directly affecting either the internal auditor or the statutory auditor, like in CARO 2020, where a reporting part is so exhaustive that even the whistleblower complaints are now brought into the reporting requirements. Now, this is something absolutely, very, very difficult thing, like a whistleblower complaints, they may what they would do, because after complaining, there could so many things that would have happened, but the reporting has to be done for that also. I'm just trying to draw the attention that how the regulators or the lawmakers are trying to see that whatever issues which are there, which otherwise are not very directly connected, are also we have to report that. Then thereafter, I was able to, go for that Prevention of Corruption Act in 2018. There was a very positive development where the definition and of the penalties and the offenses related to the accepting of undue advantages or being habitual offender and abating of the offense are being explained, and the changes have been made so effective and elaborative that the huge coverage is happening, whereby as an auditor, I will have some, may as an internal auditor, I may have, access to so many things, and probably whether any person is then covered under this Prevention of Corruption Act in 2018. Then I was able to also lay my hands to Prevention of Money Laundering Act. Here the government amended the PMLA to include the reporting of frauds to the financial intelligence units as a mandatory requirement for certain reporting entities. Now, I'm trying to bring out that, see the changes, and this is again 2019, right? Then if I go to section 143(12) of Companies Act, in there it states that if the auditor has reason to believe that there is an offense of fraud in a company, the auditor shall report that matter to central government. Now, why I'm trying to tell you this, whether it be internal auditor, statutory, or see the amount of detailing, and this is all, last 4 or 5 years. Then if I go to, SEBI listing agreements, this is again something where they have accepted Uday Kotak's aims, which is making the compliances and disclosure more transparent. And somewhere in 20, they introduced a new regulation on reporting the frauds by the listed companies, the nature and the amount of fraud, and also the action taken by the company in the response to this fraud. So this sort of, even Indian Penal Code, in 2018, it included a new section 447A that imposes criminal penalty on companies for false statement made in financial statement or books of accounts. Just see the repercussions of this. This is now now we are trying to say that if you are making something false, you can be criminally held responsible. Very recently, just 3 years back, the insolvency and bankruptcy code, many of us were practicing in that it has made it mandatory for the RP to report any suspected fraud to the appropriate authorities. Why I'm telling all these things? See the changes which are coming either to the internal auditor or to the statutory auditor, because after all, these teams will be responsible somewhere or where. So I thought just giving some different perspective about internal and statutory auditor, because most of the things were covered by Chitale sir, and so therefore I thought, let me give some different perspective. That's all.
This is great, and I think then I want to really touch upon another topic. I think that calls. I was reading somewhere just about 200 firms, and this is out of 2021 data. Only 200 firms are into internal audit. But what we hear, with this change in regulatory landscape, the expectation, I think it's a great opportunity for us as chartered accountants to venture into this area and upskill ourselves. But, another word which we keep hearing is ERM, enterprise risk management. And let me put that question to you, Sandeep. You've done a lot of this. Do you think it is really effective? Your views on this topic, right? Because a lot of you are practitioners, as I say. I mean, that would be helpful for them to hear.
So enterprise risk management, every enterprise who is running for last maybe 10, 15 years has some or the other risk management system. Otherwise, it is not possible to run an enterprise for a longer system. But the question here is how it is structured, how it is presented, and the implementation of the risk enterprise risk management system in a proper manner that can be presented to the stakeholders. So what is the problem in the Indian system? Not problem, how the typical Indian enterprise works. That is, it is generally a family driven organization at most of the times. And we can see three or maybe sometimes more generations are working together. So that is an inbuilt system of enterprise risk management system. But now we are into transformation. That system is not working now. And we are moving towards the professional entrepreneurship. The entrepreneurship generally from one family, one person is running business, and then how he manages his risk, how the enterprise risk management system works. In that era, we are moving ahead. But we unfortunately don't have a code for enterprise risk management system, the complete code like Sarbanes-Oxley regulations in US, those are prevalent. But here in India, we don't have a complete code, but we have something in our law books. In Companies Act, there are responsibilities with the board of directors. There is responsibility with the audit committee regarding financial controls and all, and regarding the enterprise risk with the board of directors. So with those, we are moving. But the problem which I started with, the problem is the persons who are responsible or who is framing those guidelines. There is risk management system, but the person who is framing, actually, it is not coming on the paper by those persons. The papers are being drafted by some professionals who are not responsible for those persons. This is a big gap. So for paper making purpose, somebody is hired and he is preparing that is gap over there. So this function has to be critically seen, and this has to be critically performed by the persons those are involved in the risk management system. And there should be a combination of professionals and entrepreneurs for making these systems. Thank you.
Please.
I think I'll just add some other perspective. Credit to Karishma. I think the way in which she's asking questions, she's tempting us to speak more. Good credit, because normally moderators speak more. I think she has the very good example of asking right question. He has brought out what is ERM. I think many of us must be doing the ERM consultancy also. Just let me put up an awkward question for all of us. How many of us have done the ERM of our own firm? Normally public answers are not expected for such questions, and because they are very awkward to answer. But I think when you go back, kindly look at this. There are always very easy solutions for somebody else. Please do it. But only one finger is towards you, 4 are towards me. So when you go back, please think over whether you're a proprietor, partner, one generation, two generation, few friends, not friends, whatever it is. Our own organization, within that organization, what is the enterprise risk management? Have I analyzed it? Have I identified it? And then if you start the talking of ERM, that can be a matter of lecture by itself. But I would leave that subject to your consideration. I think if you do that, it will help you substantially in terms of your own way of looking at yourself and looking at your organization. Because on one side, if we say that there is a going concern concept, that the going concern should be not only for the enterprise which is running the business, that going concern should be also for the enterprise which is doing the audit. And if we say that we are the enterprise doing the audit, and if we are teaching ERM to somebody else, can we relook at our own ERM? I think that's a request.
No, thank you very much. The reason I'm talking less is, because we want you to, all of you all to be heard more. But having said that, and I'm tempted to ask Atul sir on this front, right? I heard your inspirational story on Yes Bank, and it's a very regulated sector. It's not just turning around a company, it's the entire bank. And I remember when I started off my audit, Chitale sir's first thing when he told me was that if you can do an audit of a bank, you can do any audit. And turning around a bank, right? It's really inspirational. But nowadays the expectation of the board, and when I some of the board meetings which I have attended, they also ask about, okay, we just don't want to hear about operative effectiveness of controls. We want to hear more about, upper sector risk, right? And not just FS, it could be even the pharma sector, etc. We want to hear more about, the emerging risks which are coming up, right? What is your take on that? And how do you see it? And what do you think are the emerging risks of today? Or what do you think are the, how the internal auditor can add value through this?
Yeah, so a turnaround of Yes Bank, I think we will have a separate session of maybe more than 90 minutes or so. A huge amount of experience. I was just talking to Chitale sir. It was more than a full-time job for 3 years, working 12 hours daily. That was the amount of time which was spent, and that also sitting at home, because it was a very, very unfortunate thing. The day we took over from the administrator, and I think within 1 or 2 days there was a total lockdown, not only in India, whole of the world. And that was the situations where we had to work. And at that point of time, technology was also not great. None of us were knowing how to work from home. Today all of us are expert, but at that particular day, suddenly you have to say you stay home and you have to work and have interaction with all across the globe. I'll come to that a little bit later, how all across the globe and how it happened at different time zones. And it was a very, very challenging thing. But yes, good, whatever thing which ends well is absolutely great. We were not knowing, we were also being able to do so fast, but it happened. Yes, risks. Continuously, this was discussion that always happens with any sort of businesses. And what you said is absolutely correct. Today, the boards or the audit committees, they talk about not the risks which are there within the doing of business. What are the external risks, which is very important, because unless and until you are aware about this sort of risk, suddenly you will feel everything is, good at my company. And suddenly you see, there are companies which are absolutely gone. Very, very big examples we have been seeing, our photo film industry, excellent company, everything good. And suddenly you see that, the demand is zero and a whole company is gone. Then a mobile manufacturing company, it was #1 sort of thing. And suddenly, because they did not upgrade in the smartphone sort of thing, and you see that whole company is gone. Maybe these are the risks which are not within the company. Probably these are the external risks, but probably they did not look into that risk, and probably the board or the management were not able to foresee that, okay, these are the risks which would be coming. And maybe there would have been some discussion, but probably the direction was not correct. So when you talk about, first you talk about the banking industry, so biggest risk for the banking industry is, what we discuss a number of times, is that whether there would be a system of branch or not. This is the biggest risk, because today, when we talk about branch banking, we talk about Chitale sir, bank branch audit, which you mentioned, concurrent audit, which you mentioned. I think whether there will be branch or not. Today, let us see, maybe few of us may be going to branches, but the younger generation, are they ever going to the branch? I think hardly they are going to branch, rather they are not going to branch. And many of us now also have adapted to that particular situation where we don't go to branch. Now, just imagine there would be some bank sitting somewhere. Why you require to have headquarters in Delhi, Mumbai, Calcutta, Bangalore? It could be any other place, and whole bank would be running, right? This is what is happening. The IT is something which is a great challenge, and to manage that is something absolutely different. And therefore, cyber security would also be a great challenge. Because if I just try to collect some statistics, how this particular internet banking and the internet is penetrating with the country like India, which still is a developing country. Like there are 69 crores of internet users in India. So that becomes nearly 49% of our population is into internet. So just see what I'm saying, that tomorrow there'll be no branch. I'm not making a very big statement, because today it is 49, maybe tomorrow or maybe after 2 years, everybody will have internet. Then we talk about social media. There are around 48 crores of people who are into this social media already. So that would come to around 33%, 1/3 of our Indian population is into this social media. What will be future of the any industry for that matter? Big challenge. You talk about pharma industry, you talk about any industry. If we do not look into that this is a big risk, that how will the customer behavior happen when this sort of pace is happening with my internet, with my social media. Then when I talk about cellular phones, today most of our banking is done on the cellular phones. So I see that 110 crore connections are there in India. Now just imagine we have 140 crore population. 110 crore is the connection. So maybe I would put some 20-30% people having 2 or more connections. Even then, 80-90 crores separate connections, I think unique connections. Just see within few years, each one of us or majority of our Indians would have mobile connections with us. What will be happening to any industry? So these are some of the risks which I feel are very, very important. Next is the climate change which is happening. Today ESG is the word which is happening. Every major company is now started reporting on ESG, carbon credit. What is that? It is, so that also becomes very important challenge. Whether, I'll be me as a company, how I will be looking at my company 5 years down the line, 10 years down the line, whether I'm contributing negatively, positively on the environment, on the governance. I think this is very important risk which each one has to look into it. And already we have spoken on the regulatory changes which are happening. Big challenge, big risk. Tomorrow you don't know what will be as far as the regulatory changes are concerned. And that is also been done at the Institute of Chartered Accountants. Chitale sir would agree, the Chartered Accountants Act, what it was when, sir, you were as a president, what it is there when today it is. And see the risks, what is there, just one line in any of the regulation in the Chartered Accountant Act was just one simple line. The definition of chartered accountant today is anybody who passes the exam conducted by the Institute of Chartered Accountants. Just one small line, or any other prescribed institute. Just see the risk. This is what is to be looked into. That's all from my side. Thank you.
So this is really, really interesting. Like when you hear, so you touch upon 3-4 things. One is from a risk perspective, the responsibility of not only we know about statutory audit, but the internal auditor is increasing day by day. Of course, the expectations of the board to cover more value added comments in their report, and not just the operative effectiveness, the sector knowledge, the we are talking about the emerging risk, right? And ESG. So it's not just the financial information. There's a lot of emphasis even on the non-financial information as well. But given the increasing responsibility, and sir, would like to hear from you in terms of what is really the liability of the internal auditor, because today with so much of regulations and you see that sense of fear, right? Whether to report, not to report, as you articulated in the first thing. And if I don't report, will the regulator hit me? So there's increasing sense of fear. And what do you think is the real liability imposed on the internal auditor, sir?
Yeah, I think two things. First, just continuing with what Atul mentioned about the risk, because that takes my topic to slightly beyond internal audit. I think with the internet, the likes and the dislikes on the mobile are the biggest risk. When you go back to your home, please find out what are the likes and dislikes. Even a child at the age of 5 or 6 says, I got 20 likes, I got 25 dislikes. I think to me, for the human race, that's the greatest risk. Slowly, we are losing the track of a human being to be responsible to each other. We are saying mobile to be responsible to each other. And what we write is becoming more important on the mobile than what we think. तो हिंदी में एक थोड़ा पहले कवर करूंगा. सोचो वही जो बेहिचक बोल सको, बोलो वही जिसके नीचे हस्ताक्षर कर सको. I think that's the greatest risk for all of us, because slowly we are losing the track of all of us being originally human being, then a professional, family person, society, and a nation. I think if we lose this track, then which profession you are in, what activity you are doing will lose the sense in a period of next 20 years. Very, very clear. I think the point is, what is the scope for internal audit? I think the scope will always be tremendous. The reason being, corporates, business houses, education institutions, medical institutions, the activities which are done in a commercial manner on a holistic basis on a large scale is going to increase. In fact, if you look at the CA firms, 50 years ago, somebody starting a proprietary concern was considered normal. Today, if somebody is starting a proprietary concern, I think the others look at him. I'm just trying to distinguish between the two. So today, even a CA firm to start with, people say, "Arey, do to ho, char to ho, koi to partners banao." So that means going to the size is a natural activity. You might get a client which is the CA firm asking you to the internal audit of that firm. Just visualize. So I think for the internal audit, it is the scope will be always there. The question is, do we understand what is expected from us? Are we preparing ourselves for that? Are we preparing the soft skills which are required for us? And most important, do we believe that only I know it? I think my team, my assistants, my partners must know it. When I start believing that only I need to know it, the organization would never grow. I think if we keep that to be the goal for the organization, and as I said, enterprise risk management of our own firms, the scope can be always expanding and there will be more and more scope for us.
I know sir has to leave, but before that, won't let you leave. Any questions which the audience has, happy to take before we proceed. Yes, sir. Can you give the mic there, please?
Yeah, there are two. One is there. We can take 5 minutes.
Excellent discussion. Thank you for that. I have a question. Let's say a chartered accountant aspires to start a practice in internal audit. The challenge is, though he's not supposed to be independent in the classical sense or the purest sense of a statutory auditor, but yet he has to act without fear or favor. So that is, in that sense, a limited independence. So as an internal auditor, I'm often apprehensive whether I will get that autonomy within that company. So how do I, at that point in time, gauge whether I'll get that autonomy to perform? When I've not accepted the assignment, but I need to know the culture which prevails.
Who wants to take that?
Yeah, so I understand just understanding your question is that the scope of internal audit and the freedom. Yeah. So independence, I would put it as independence.
Limited independence. Which we
Yeah.
can
Yeah.
say.
So I think when you talk about internal audit, the client has to understand that why he is doing an internal audit, whether there is any value addition which is required by the client or not. That is the first question. Because as I said, the tone at the top is very important. So unless and until you do not get the independence, the performance would be below par or below expectation, at least for your personal satisfaction. So what is the purpose? So what the question which you're raising is, how can I do that? I think the first thing is,
gauge that. How do I gauge that? How do I?
So maybe you have to talk before you accept the assignment. This is the question, right? So this is where you have to ask the questions that what is the expectation? Expectation is what is the scope of improvement in doing the business in whatever areas, right? And therefore, you will require a full independence of going into the various aspects of the business and give a viewpoint that where there are risks and where there is scope of improvement. It is possible that you will give lot of things which are not happening correctly in the concern. If the bosses are ready to accept it, then probably it would be easier for you to accept the assignment. If at that point of time, if you feel that acceptance is with reluctance, probably you have to think twice whether you will get the independence in future or not. I think this is what is the barometer which you have to.
As a coach, what I would want is a checklist. And if I tick and I say that so many boxes are ticked, then this is probably.
At least I would feel this job is not a checklist job.
Yeah.
Because this is a very subjective thing. This internal audit cannot be objective. So this is my viewpoint. Chitale sir, you can add to it.
Sir, just a similar question. There are many chartered accountants here who aspire to be an independent director. But many of us are apprehensive because these are not the top-notch companies, the tier 1 companies. These are maybe the second, third, or fourth rung, if the fourth rung exists. So we are apprehensive. What is the risk of becoming an independent director in those companies? You must have gone through that. This is the beginning of your stint as an independent director. How do we brace to that? Would want if we were to become an independent director, please. Both the questions.
Yeah. I think both questions I'll try and answer. You can sit down, be comfortable.
Yeah.
See, independence is always a mirage. Let's understand that very clearly. Without adding any political ideology, it is like communism. Very easy to explain, very difficult to implement. Let's begin with that analogy very, very clearly. Independence does not mean arrogance. It means that I would be able to say what I wish to say. And if somebody stops me from saying that, I will be willing to move out. I think that's independence. It doesn't mean that I'll keep on saying anything and everything that I like. I think there is a big difference between the word independence as understood in social life and the independence as understood in audit life. If I take your cue forward, even the statutory auditors, I would have the same problem. Why talk about internal audit? Even the statutory auditors have the same problem. So let's leave in the current world. In the current world, I think if we wish to start with the internal audit, slowly we'll have to develop that. Number one, by and large, the management would have to be convinced that what work you're doing is beneficial to them, is useful to them, then they would continue with you. The world is very cruel. They won't continue with us if they don't find any benefit in what we are doing. So pure compliance audit will not be beneficial. Something more than that, where your skills are found to be useful to the organization, I think that would happen. I think that's my, if you ask me, experience. On the independent director, yes, I think I have been also through the process, but let me not try to explain my process. That's not the point. With the every increasing problems in the commercial world, because every 5 years we have a new fraud. And with every fraud, the country gets a new law. One can take the history of a law and find out which is the problem which gave rise to the law. And therefore, the responsibilities of independent directors are going to keep on increasing. And therefore, the first and foremost will be our knowledge of the subject will have to be much, much better than what it could be. I do not mean to say that everybody doesn't have the knowledge, but there's a difference between information and knowledge. Many of us have information, but let's shake up whether we have the knowledge. First point. Second point, we must know the culture of the organization very clearly. By and large, we should look at the management, what way they are, and are they open for discussions at least to begin with on a one-to-one basis. Those who are not open to discussions even on one-to-one basis, you may have to stay away from them. Even if you know somebody is a friend, it's a different relationship to be friendly and it's a different relationship to be a director. These two things necessarily do not go together. So even if you are joining a company which is run by your friend, you may have to ask him very clearly, will you be open if I point out a problem to you? Try and understand his psychology, whether it is possible or not. And then I think that's the place to go in. And very crude way to say that, but your resignation letter should be ready in the pocket. If you get tempted so much that you wish to continue even if there are difficulties, then I think the path forward is normally more difficult. Again, it does not mean the arrogance of saying that I'll resign if you do something like this. Not that way. But a mental willingness to say that, look, I would do this only as long as I'm allowed to have my freedom, independence within the four walls of the organization, then we can enjoy the relationship. I think with that kind of an approach, slowly the things keep developing, and beyond one directorship, I think the rest of it happens through the word of mouth. Nobody has to be on the list of independent directors published by MCA to be called for one more directorship. I think the rest of it happens because somebody keeps on reminding, remembering you, recommending you, etc., etc. This word 360-degree approach, etc., is actually done in life by your colleagues when they keep watching you. I think that's a simple way of dealing with the subject.
Thanks.
Don't you think now that internal audit is more defined by all the regulations? It's become more of a regulatory thing. So, I mean, both internal audit as well as statutory audit, like Mr. Bheda was saying, this regulation, that regulation, everywhere, every regulator says that I want this. So there itself, your scope is defined. So I have a feeling, I mean, you all can correct me, the experts, that both internal audit and statutory audit are only regulatory. I don't see any scope beyond the regulation. I have not seen anyone doing something more than what the regulator requires.
I think that's where the skill of the management board will determine how the organization will move forward. It is accepted that the compliance requirements are increasing substantially. In fact, now the CARO has been amended where the statutory auditors have to inform whether the internal audit was properly done and to have to state that they have considered the internal audit report. In this language or in this process, I think after 5 years, we might get an amendment to say that, yes, I have looked at the minutes of the meeting of the board also. So I think we have to have a logic in law everywhere. But I think let me come to your point. All good managements are trying to have a combination of compliance plus something more. If that something more is not done, the company would never progress beyond the point. So I think in internal audit, those corporates, those boards which try and ensure that the compliance management is done, but internal audit will have to look at something much more than only compliance. And as far as statutory audits are concerned, today the compliance itself is so heavy. Now there's a new standard called NOCLAR. I think if we start talking on NOCLAR, that will take one more session. But with the NOCLAR and so much compliance being required to be considered by statutory audit, one has to do the audit through the compliance mechanism only. But I think there's no other option but to do it that way.
Any other question?
Yeah, please.
I just want to request you that so much of emphasis is given in all these subjects. But I see tomorrow our audit profession, independent directors, internal, statutory, social audit, all these things will revolve only on the risk management perspective. Am I a independent director or internal auditor or statutory auditor is able to provide the value to the organization? Now in the enterprise management, am I able to give the inputs to the management? Look, your survival is not 30 years or 30 days or 30 minutes. Are you very seriously focused or rather locked on the competition or the very small margins or on the material cost or on the logistic cost or on the international or on the environmental process? All these things are the most important things, which is the day. I like it or not, any number of the days and any number of the clauses are there put into any kind of the requirements. They are good for the things like I heard once. Aag lagi kya? So one matter was put into the report. Last fire held on. So it kept on writing the last fire kab hua. It is relevant? No. Is it relevant? No. Haridas Mundra ne dekha. Oh, show me where is written in the clause, what is the main clause and objective clause. The clause was changed. Who was the most important person in the Companies Act? Most intelligent person, Haridas Mundra. Nobody knows why. Because he was the person who changed the Companies Act, saying that because of these all radical, irrelevant kind of logics, that the clauses are the same. So we are able to manage or give the value addition to the organization, only enterprise risk management. There are 10 items. Okay, 3 months down the line, am I going bad or worst or the very good or very bad? Is there a team for addressing any of these 5 items or no? I am not addressing any of these items. I am only going on the only on the organization, which is that the prospective in the terms of the law. I think that is good for the law creators and the subscribers, or the internal auditor, yes, sir, or the independent director, yes, sir. But in real sense, as you said, eyes and ears of the organization. Who am I? Am I independent? No. Am I able to focus on those things? Those things who can bring the higher values will survive for a long. Thank you very much.
I think you rightly pointed out, everything depends upon what the law is, but we get the law that we deserve. I think as a citizen, let us look at the subject in a different fashion. If we don't respond properly in terms of crisis, we get a new law. I think let me not try and go to that other thing. But I think end of the day, all of us, what we are doing some function in a professional manner for the organization, which is going to pay us. In the process, these are individuals who are going to do actual work. And there are some skill sets which are required. And let me complete, at least for me, initially, Sandeep, we were told that he has studied Ramayana, Mahabharata, etc. So I'm tempted to use something from Ramayana. तुलसी रामायण में हनुमान जी की कथा है और उसमें हनुमान जी का वर्णन ऐसा किया है कि वो अति चतुर थे और चतुर किसको कहा है वो भी कहा है कि कुशाग्र, कुशल, कोमल और कठोर, जिसके पास ये 4 स्किल्स है, कुशाग्र, कुशल, कोमल और कठोर. In case we want to be good professionals, we'll have to be good human beings first. And I think for that, these 4 skills added put together plus our knowledge can take us through anywhere. Thank you.
So very well said, sir. And I always wanted sir to have the last word, and he indeed had the last word. But in a nutshell, I think, more than your technical skill sets, I think soft skills will play an important role. And of course, integrity, which is given, right? So 4 things which I took away. One is you need to be agile, given the changing regulatory and the technology landscape. As an auditor, be it internal auditor or a statutory auditor or any other audits you do, agility will play a very important role. As sir rightly articulated, you need to be eyes and ears for the organization, for the management, for the board as a whole. But thank you very much, all 3 of you. It was, I learned a lot. I assume it's a similar feeling for you, and I hand it over to Pinky ji for the vote of thanks. Yeah.
Thank you, Karishma ji, for nice moderating the session. And we want to thank all the 3 panelists. It was great discussion. Sir has to go, Chitale sir. That's why we are ending up here this session. But for this, I want to request CA Nimisa to give a formal vote of thanks to today's panelist.
Though sir had to go, but we really took 20-25 minutes more than the stipulated time. So thank you very much, sir.
Thank you, Pinky. Indeed, it's an honor to hear the panel discussion this morning on expectation from internal auditor. I'm sure you all will agree, change is the new normal and is the constant thing which is happening. As a result, the role of an internal auditor is also changing and expanding. There are some few key takes away from my side, which I would like to just summarize on behalf of everyone. First is independence and communication. It's said that communication is the lifeline of all relations. But the important thing in communication is to hear what is not being said. So that's most important. How do you communicate and also remain independent in the role that you're performing? Technology. I think this was another topic which was spoken. With technology expanding, new analytics coming in, it cannot replace human intelligence, but it will definitely augment and help us in being more efficient and quicker in performing our role. And lastly, we spoke about the performance with regard to enterprise risk management and the role of internal auditor with regard to going beyond the factual statements which are available. On behalf of WIRC, I request and extend heartfelt gratitude to our speaker. Please put your hands together for round out round. Thank you.
Uh, Now, there is a surprise session. Please don't go outside. Please be here. Now this is a surprise session. Actually, in our M2M or agenda, we were planning for network session at the end of the day. But what the feedback I got yesterday, that if we took this networking session before the lunch, then it will be more beneficial, because then they can meet in the lunch and talk to each other. And I requested our participant, CA Ajay Basu, so if he can took the charge of this role of moderator for this session, and I thank him to accept this role. So may I request Ajay ji to took the charge? आप बोल खड़े होके बोलोगे तो खड़े होके ले कैसे आप yeah in whatever manner you are comfortable.
I'll start from here. Can I get this pani ka bottle? A very good morning to you. So I think it's nearing afternoon and lunchtime. So probably it's a bit subdued. Okay. Friends, first I should apologize. I'm not properly attired. My dress is not proper. I would have come with my best jacket. If I had known that, I would be scaling the stage. But it's a Saturday. I think it can be excused. Now, my friends, I told Pinky, I think her name is Pinky, not to tell anything about me. As I perform, I think I will be introducing myself. Let me tell you very briefly in 2 lines, what can you expect from this particular session? I am a performance coach. When I say I'm a chartered accountant, so that's why I'm here. That's, I think, my grain. That's exactly my being. But many years back, I realized, especially when I was attending meetings of the board, that people were functioning only to 1/3 of the potential. And it was across the board. It was not just about professionals. A person who was in charge of HR, marketing, production, everywhere. They would be at very senior levels of management or stagnating at the mid-level, trying to get on to the mainstream, but struggling. So from that day onwards, I decided that I'll try and become a coach. So today, what I do is I coach mid and senior managers to be 3 times more productive than what they are. And fortunately, during the time of COVID, when we were stagnated at home, I could develop into an online delivery. And now I take both online and hybrid delivery of coaching to my clients. This is a brief introduction of me. Now, let me tell you, what do I do? And this can have a significant impact on you. I will not call this a personal development class. It's a personal disruption class. Sometimes you have to shake up things so that a new reality emerges from it. So what I plan to do is, for the time that I have, in about 20-25 minutes, I'll present what you can do to transform yourself, maybe in the next 6 months, to be maybe 50, 60% more potent than what you are today with good delivery, and maybe 6 months down the line, double of what you are today. Now, two concepts I want to put in. I call it the 70-30 concept. What is the 70-30 concept? Let's say we are chartered accountants today. My core competence is 70%. So what's my core competence? Accounting, auditing, company law, taxation, FEMA. We practice in all that. That is my 70%. What is the 30%, which is that crucial component of this equation? 30% are 15 plus skills which I train in. Those 15 plus skills are what? I'll tell you some of them. Your word power. So you talked about communication. The lady mentioned that communication is important. But saying communication is important, but how do you acquire that and translate it down to the ground level? So my word power. What is word power? How do I train myself? If I think of the word mistake in my mind, or my students or participants or people whom I train, in their mind, these words come automatically. Mistake, error, oversight, blunder, gap, fiber, and so on. 8, 9 words simultaneously in a cluster. So what happens is, in the forum in which I'm speaking, depending on what is the expectation of the people to draw the communication from, I'll pick the precise word and I'll put it across. So it will be scolding a child, reprimanding, castigating, berating, chiding. This will come. Many of these words you will not use in the common parlance. Maybe I'll use it more in my typing, when I put it in a written communication. But that word power which I have, that gives me an extraordinary advantage. Words have to then be converted to sentences. Because if you just remember a word and you cannot cast it into a sentence, then you're stuck. So word power, sentence power, pronunciation. These are areas which we don't even work on because we have evolved from our childhood just like that. So to tell you very briefly, it is confirm, but confirmation, not confirmation. Consult, consultation. It's not vis-a-vis, it's vis-a-vis. It's not vice versa, it is vice versa. Sab milke those 200, 300 words hai, which you make a mistake. Now, just imagine, you already identify these 200, 300 words. It's a beautiful yatra, let me tell you that. As you come across, you should know how to identify which words you are not pronouncing properly. Okay, that's a challenge. Ye ek ghante mein, I cannot give you everything, but you'll get a pretty good idea. It's not idea, it's idea. Okay, that's the correct pronunciation. Now, some of you will ask me, kya itna Angrezi bolta hai? What difference does it make? What I'm speaking, you understand the others. I'll tell you where it makes a difference. Most of my clients are multinationals. Some of these directors can't even speak Hindi. Okay, for that matter. When they see that how I pronounce, and there is one director who is from UK, another from the US. For the UK guy, it is dynasty. For the American, it is dynasty. It is privacy for UK, privacy for the American. Among me and so many chartered accountants, there are some who are better than me, no doubt about it. But because I have this particular advantage, they fall in love with me almost. And I get that edge. So pronunciation is one part. Another very basic skill I'll tell you, which is the first skill which I teach a top-level manager. Typing. What is the first thing I do when I enter my office? In fact, I don't even need a computer for that. I type from A to Z and Z to A without looking at the keyboard. Now, why do I do that? Because let's see how work manifests. Yeah, can you hear me? Or this is better? That is better. Abhi here. Okay. If you see me directly, then I think it will register faster. How does work manifest for a person? Work manifests in two forms. Written, that is a report which goes out, your audit report. You cannot hear. Are ekdam jor se karo. Okay. So there are two types in the way work manifests. First is the written report, the audit report. The second is when I speak now. As I speak, what happens? What's the process like? I get an idea, a great idea. How do you get a great idea? You need lots of knowledge. Without knowledge, you will not get a great idea. So how do you get knowledge? You need to read a lot. You need to travel a lot. You need to experience a lot. So knowledge first. You get an idea. The idea then needs to be processed and quickly converted into words. So your word power comes into play. So if I'm doing the writing, as I'm doing my typing, if I'm going to look down at the keyboard, then look up, then again look down, look up, you're badly disrupted. It's a pain in the neck. You are 50% compromised just by not knowing, not making the keyboard an extension of you. Now, what do I do by making A to Z and Z to A? Yes, for special characters like your semicolon, your brackets, asterisk mark. Yes, I need to look at that, but that's very rare. Most of the time, you're looking at alphabet. So if someone is doing a two-finger typing and looking at the keyboard up and down, when I look at him, I feel it's so pitiable. Otherwise, a brilliant mind, a professional, and I can see that they're already functioning at 50% of the capacity. So typing skill. Now, how have I perfected myself and my clients? If I'm taking an early morning flight, I don't have my computer immediately with me. I can even type on the tray which I can unfold. I can even do it in the air because I've been doing it for so many years. I know how the typing has to be done. So first is the typing skill, word power, sentence power, pronunciation, that comes in. Then comes certain other skills, like we are chartered accountants. We are very strong at numbers orientation, a bit of accounting, the spreadsheet skills. So the 60 plus spreadsheet skills, I train people, especially the HR, marketing, production guys, directors. Their numbers orientation sometimes is less unless they're from a financial background, but the engineers need to be trained in that. I put in that. How do you read a legal document quickly? You're given a 100-page document. As chartered accountants, we are familiar with it, but many chartered accountants are not. The moment you see a 100-page document, sleep is instantaneous. You feel somewhat a document, where do I look for what? So how do you read that so that in an hour and a half, you can opine, you can put into the management that these are the areas that we need to look at. There is a science to it. Then I train them into preparing a business plan that you know about. Business plan is nothing but the projections across 5 years. Of course, the chartered accountant makes one for the bank, which is what the bank wants, which may not be the real one, really, isn't it? So how do you prepare a business plan? Then how do you conduct meetings? This is another huge area that you should look at. One of the assignments which I get is, I've coined a phrase called the meeting jockey. What is a meeting jockey? Many years back, when I was attending a meeting of the board, the old chairman was sitting at one end and he was half asleep. Actually, he should have retired 5 years back. So he was looking at it. People were discussing. No decision could be taken without the chairman's consent. So the chairman was looking at them. Then they asked the chairman, sir, should we go ahead with this? So he looked at him and at an angle, he twisted his head. It was not clear whether it was yes or no. And no one had the courage to ask. Okay. Listening to so many meetings, people taking down the notes on a scribbling pad, each one looking at it. And I was looking at what each one was scribbling on each pad. I felt the waste of time was extraordinary. How do I make the meetings more productive? So now this meeting jockey when I train many people on that, what does he do? We put the proceedings on the screen. We put up a projector and people will start working on that. As they are talking, I as a meeting jockey will start putting the notes on the screen. No one will be looking at each other. If I look at each other, I will start thinking, what a beautiful shirt he's worn. Okay, terrific. That's a distraction. I look at someone else, oh, yesterday he messed up my happiness. So there is another distracting thought. It takes you away from the productivity. So what do? I put it on the screen. So even if there are two warring factions, we call in our Hindi slang as Mandavli, okay? If I have to bring them together, I put that on the screen. And what happens is it becomes absolutely objective. Your eyes are riveted on the screen. Your issue is someone says, no, I think there are some times, in the meeting, there are some people who will not commit. So if I say, Mr. X, what is your opinion on this particular issue? So he says, I think so. I said, then you're not prepared to give your commitment. I'll put a question mark there. We'll come back to that. He cannot escape. I improved the productivity of meetings at least 3 times, threefold. That's what the meeting jockey does. So what do you need for the meeting jockey? I have to be very fast on the keyboard because it has to come on the screen. My communication has to be good. As a professional, I have an advantage that a chartered accountant is supposed to be trustworthy. Exit. People think that, yes, this professional we can share. Aren't we as chartered accountants, we are privy to so much information about our clients, and the client trusts us. It's almost like you're an internal part of the family. Okay. So that trustworthiness, knowledge of the subject. As chartered accountant, I've been a faculty for the CPA course of the US for 14 years. I used to teach audit for them long back. I used to think at that time, though the passing percentage was very tough because 50% passing for each subject, there were only 4 subjects. Our institute, it made us study everything under the sun, whether it's the constitution, the labor laws, everything. But it gave us an extraordinarily comprehensive range of knowledge. Today we can get into any area and there is nothing which can cross our imagination. We immediately can grasp what people are talking about. The logical orientation also is so strong. So my friends, as chartered accountants, you're an extraordinary creature. You're 0.004% of the population or even less. It's a genius in each one of us. In my course, I always say, thousands of geniuses live and die undiscovered, either by themselves or others. Genius is within you. The ability to translate it is what is required. I always say, you may have strengths. What is my strength? Before I started with this on this journey, this yatra, my strength was my chartered accountancy, my knowledge of auditing. Being a professor of audit, yes, I needed to be good at it. So I taught for BCom, accounting, taxation, costing, financial management on the Bombay University. Those were my strengths. But strength has to be converted to power. What is power as compared to strength? Let me explain. I would have put it to you and then taken the views from you to make it interactive. But what I'm trying to do is condense probably about 6 hours of information into these 35, 40 minutes. So you have to pardon me if I'm not very interactive, but I wanted to spew out as much as I can. How does strength get converted to power? Let us say I have good knowledge of a subject. That's a terrific strength, okay? Strength should be deliverable, deployable, instantaneously, and should be accepted by you. If you do not accept my strength, it is not power. So strength to be made power has to have certain other strengths associated with that. One strength will never deliver. So what is my strength to deliver to you? I have knowledge of the subject. I have my word power, sentence power, my public speaking skills. I'll come to that towards the end. My public speaking skills, the ability to put it across to you. And after listening to me for some time, you get the impression, yes, this man is delivering. I should pay some obeisance to him. That is, I should listen to him. Okay. So strength has to be converted to power. Each one of us here in this room has the strengths. Have we converted that to be into some power to be powerful? Can we instantaneously, it's not just deployment, instantaneous deployment, so that the persons will immediately grasp it and will be able to use it quickly. This requires a lot of effort. So now 2 concepts I'll put across before I come to public speaking. 70-30 formula. 70 is my CS strengths. 30% are the soft and hard skills. I don't call them only soft skills, also hard skills. So 70 into 30 is how much? 2,100. I have taught hundreds of students, thousands, okay, BCom, and if I put CPA together over 14 years. Now, when I'm training people, I've trained hundreds of managers. I find that 70 core domain, if the production guy, then his technical qualification, experience at the plant, very few are above 60, most are above at 50. 50% is very good, 50. Now that 30%. 30% may, most people, most I can tell you, almost 60% are only 10. So 50 into 10 is how much? First interactive discussion. 50 into 10 is 500. And how much is my total potential? 70 into 30, 2,100. A very competent technical person is 500 out of 2,100, less than 1/4 is potential. If he makes that 30% into 20%, then it is 50 into 20, it is 1,000. It's just about 50%. From 50 to go to 70 in your core area of technical, these are the ultra experts. Some of them were sitting here. I would put them at about 60%. And our field is such, it's very dynamic. Regulations, as they say, change from day to day, if not by the hour. So to be dynamic and be updated is tough. But let us say 60%. 60% into, and if you are at somewhere around 20-25% in that, then you are the winner. You are the Mukaddar ka Sikandar. Nothing will stop you. Wherever you are put onto, you will be able to succeed because you have developed the ability to translate your strengths into power and you become a person with immense power. That is what is delivery. So the corporate managers whom I train, they realize within 6 months that the transition, the transformation which has taken place is extraordinary. Now, one more example before we will do some interaction is very important. When I was teaching for the college, my principal used to say that he is the best professor we have. I could have been very happy with that, but I started thinking, what more can I do? I was not like this, a little different, not so polished, not so forthcoming. I was an introverted person at that point in time. We all come from middle class backgrounds and we have to evolve. So I thought, what more can I do to be an extraordinary performer, a better professor than what I was at that point in time? So I thought and thought. I said on the subject side, I was pretty strong, but I was always oriented towards a bit of management and training. So I said there was nothing I could do with my voice. I've not learned anything. Bachpan se jo roke bahar nikla hai, that voice chalte aaya, no voice modulation or culture was learned. Okay, so I said, let me work on that. Those were the Mahabharat days, nothing, the serial was very popular. No one would be seen on the road when it was playing. So at that time, one of the guys had put up an advertisement in the newspaper that for training on voice culture, I'm running classes, okay? So it was very expensive. In those years, in the 90s, it was something like 20,000 bucks. It is like someone telling you today, my friend, you give me 2.5 lakhs of rupees and I will help you to modulate your voice. Would you go for that? You would not. You say, voice change karke kya karna hai? I thought for a moment, I said, that is an area I need to work on. And I'll tell you how I used to speak at that time. My voice was like this. I used to speak like this. It was very soft. I would not be speaking in the way I used to be. Why? Because I was speaking without opening my mouth much. It was within the roof of my mouth that the voice was coming. This was the first thing. Those people sent me to a speech therapist. When do you go to a speech therapist? You feel that you go to a speech therapist when you stammer, like ka Kiran. Okay, usko ठीक करने के लिए ka Kiran को Kiran करने के लिए. ठीक है? You go to a speech therapist. No, my friends. I went there. They recorded my voice. Those were years where there were not so many computers, but she recorded my voice. She says, you can have a great voice, but you need to work on it. And then they put me onto that. And the first thing which I learned from them is, I need to open my mouth a little more when speaking. I had to speak from a little lower in my throat. So from this type of voice, I started speaking a little deeper, then even deeper, then like your big boss. Okay, that way. Now, who would have taught me that? Okay, as a chartered accountant, I would have concentrated more and more on my accounts, my taxation, my FEMA, my company law, my international taxation. And this side, this vital, critical 30% would have been lost. What would have been your performance orientation then? Yes, on the technical side, I would have been brilliant, but probably on a scale of 1 to 10, where you could have reached in your life. And I'll tell you what, I have a concept called Riyaz. Riyaz is what, Riyaz in Urdu is your daily practice. 70% of my time is going through all my technical literature. Technical literature is my tax, FEMA, company law. But another big area of mine is management training. So I have a lot of literature on management. I'm a member of the World Body of Executive Coaches. So I get a lot of data from there, which I need to imbibe and assimilate so that I can impart it to the people, because I coach people. So the 70% of my time is still on that, but 30% of my time is on all these skills. Every day, at least 1 hour, on a Sunday, probably 2 hours, I will spend time on my Riyaz to enable me to be more proficient at this 30%. Because I know my lifeline depends as much on the 30%, because that 30%, if it is not strong, that 50 into 30 will not be 1,500. That 50 into 10 will be 500. I'll be still a very mediocre performer in the annals of the profession. And it gives you one more big advantage. You can move from the profession if you want to and get into the mainstream of management. Because wherever you are, you'll be able to instantaneously deploy yourself without any difficulty. So my friends, this is a very brief submission of my story. There was a film called Shore, in which Manoj Kumar and I think Nanda was there. Usme ek pankti hai, दो पल के जीवन से एक उम्र चुरानी है, जिंदगी और कुछ भी नहीं, तेरी मेरी कहानी है. I've tried to do that. In a whole volume of my experience, I've tried to extract that much and just put it to you as a food for thought. Now, my friends, we start the networking with this particular background. I want any one of you, in teaching, we have one lighter moment. When we ask questions, there are 3 types of questions. After that, we'll start. One is called the heart attack. Heart attack क्या है? आप बोलो मेरे को. उसको, if that person is not convenient answering the question, so that is sudden death or heart attack. Second is slow poison. Slow poison क्या है? यहाँ से मैं शुरू करता हूँ, तो वो आदमी जो है उधर, उसका slow poison है. वो बोला आएगा जब, but as it comes closer, it is a mild heart attack. Okay. And the third is sweet popcorn. Can anyone give me an answer? So you're not on the radar. You've escaped. Okay. So I'm not making it the sudden death or the heart attack or the slow poison. We will make it the sharing experience in the light of what I have said. And I'm very happy that we have a lot of people with a lot of experience. Okay. How do you relate to this presentation which I have made? I want you to give me a very frank view. You can use any language that you want to, as long as we understand. And tell us that what you feel in the journey of this profession, your pursuit of life, how you have experienced it. Any one of you, please. heart attack karna padega. Yes, please. Anyone. I'll be very grateful to you because sharing is something. I start normally with sharing. We start telling people that, friends, you tell us that Mark Twain, as I said, thousands of geniuses live and die undiscovered either by themselves or by others. So I asked them, according to them, if they were to reach there and they have not reached there, what has been their self-evaluation of what were the factors that did not enable them to reach there? So I have told you what is my assessment. And this is something which I've seen from my students. In my college where I used to teach in the staff room, meeting the students, then for the chartered accountants and CPA course people who used to attend my class, the people whom I coach in the corporates, from there I have garnered this experience. What is your feedback on this? You can tell me your experience, please. Anyone? Yes, please.
I always felt, like you said, that I have not realized my potential to the fullest. Now I know one of the reasons is your 70-30 for sure.
Yep.
And the second thing which you said is, which I can't agree more, is your ability to communicate.
Very true.
Once, see, it's not enough knowing. You know something, but keep it to yourself.
That is the strength. You have to make it power, as I said. Yeah.
So unless you communicate and communicate in the right way, like you said, pronunciation, the sentence, the word, if you don't use them properly, they are of no use. So I take these 2 points from you, and I am grateful to you. I thank you for enlightening me on these 2 very important things. Thank you.
Hey, that's great. One man has endorsed me. And ek baat aapko bolta hu. There was one chairman of a company, 65 years of age. Okay. Thoda stomach se baat kar raha hu, zyada impact ke liye. Okay. So he said, I want to transform myself. Uska ladka dar gaya kyunki company ka charge usko de diya tha already. Bola agar ye itna kabil ho gaya, mere ko bhi overtake kar diya, to kya hoga? Okay. But I told him, okay. He says, I want to start all over and he told me, you should have met me 20 years back. I said, abhi to aa gaya na. So he picked up one by one, and 20-25 minutes a day, he spent time on, and he was a production man. Okay. Production supervisor say he built up a good corporate. English. Okay. Spoken, written, because written also is important. As I said, when you quickly put in a report, you just imagine if you are 2 to 3 times more productive, you will do 2 to 3 times more work. You'll be appreciated by so many people. You'll be accepted by so many people. It will galvanize a change in your life. So time management doesn't become a problem. He picked up one by one, even, spreadsheet skills, how to calculate the IRR, the XIRR, the MIRR. There are so many. He was so fascinated, like a child. Okay. So he could do the transformation. You put 20, I have something called, as I said, Riaz, self-prescription. You have to identify, each one of you is different. Your strengths are different. You have to make them into power. So if you decide today that your word power is okay, pronunciation is a problem, then you have to identify on a day-to-day basis, listen to the news reader and find out which is the word you pronounce differently and the newsreader pronounces differently. Shireen Ban on CNBC or so many of them. If they are pronouncing differently, that means you're wrong somewhere. So you write down that word, check out from the internet. Internet today is beautiful. You just have to click on the audio icon and you will get the correct pronunciation. Learn a bit of phonetics. Every day, if you concentrate 20-25 minutes on the language, I'll tell you what, in 6 months' time, people will not recognize that you were the same person who was struggling to put it across. But this has to be built brick by brick. You have to carve out your self-prescription and you have to put it as part of your Riyaz. Riyaz is your daily commitment, your contract with yourself. Once you put that, so mere riyaz mein kya hai, main batata hun. By that time, I want some of you to stand up and speak. Mere riyaz mein kya hai? Typing A to Z, Z to A, sabere. उससे ये भी पता चलता है कि दिमाग बराबर चल रहा है. Motor control, ना? A to Z, Z to A. हम accountants to numerical pad में we are masters. 1, 2, 3, 4. So, but for people who are not accountants, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9, 8, 7, 6, 5, 4, 3, 2, 1. I ask them to do it in all parts. So what happens when they are working, they don't have to look at the keyboard much. Second of my riyaz, when I walk on my treadmill, I keep a collection of maybe a few hundred English words and sentences. Even as I'm walking, I'm just breezing through them. They say that we can read 600 words a minute comfortably, the human being. With our cognitive ability, the brain, we have a brain of 1,350 grams. The chimpanzee from where we came had only 360 grams of brain. Bigger the brain, more the cognitive ability. So when I'm walking on the treadmill for this 30, 40 minutes, I'm breezing through, not at 600 words a minute. Oh, मैंने इतने महीनों से, बरसों से देखा है वो words, sentences form में. I don't remember it as words. I remember it as sentences. And at this, I tell all my students, my participants, my mentees, don't remember as words, because some words के लिए अगर सोचोगे, alumni words, उसको भी sentence में भी डालना है. So when you're reading a newspaper, when you read an article on the internet, when you're reading a textbook, you see which sentence looks something which is interesting, appealing, and probably usable as you go forward. You take that out and put it in your collection. Collection क्या होता है? A Word document in which I put one row and maybe 1,000 columns. क्योंकि इतना जम जाता है ना. So as I do it, I scan over these words. They are all refreshed even before I start my day. In a day, I practice about 10, 15 spreadsheet skills. They are very advanced skills, like your macros, your power pivot, your sum ifs, and so on. Because 60 functions in my spreadsheet ka, which I may need to use as I become more and more into management training and less as a CA. Maybe I will not use the spreadsheet skills that much, but I still make business plans. So every day, 10-15 spreadsheet skills I do use. In the night before I sleep, I at least go through about 100 pages of tax matter, FEMA matter, company law matter, because I still practice. There is a firm which I still run. This is my riyaz. Mera kaam kuch bhi ho, main kahan par bhi hu. Yes, and about 45 minutes of workout also is my riyaz, deep breathing, etc. Because I need to be strong and fit to deliver. अगर मैं 7 बजे कोई थक जाऊंगा, then how will I be able to lead a fuller life? That is my riyaz. Sundays ko I come down to my office. Office ground floor mein hai, I stay on the 4th floor. So commuting is ruled out. On Sundays, I practice public speaking. हाँ? Introduce कोई कर नहीं रहा है. हाँ, अभी होगा 2 minutes में. Okay. Okay, what we do is, so on Sundays, I practice my public speaking. Public speaking is how do I stand? Where do I look? Should I look at one person only all the time and speak? What should be the pitch of my voice? What should be my hand movements? All that you need to train directors and managers for them to perform. Okay. So this is my riyaz. You sit down, make your own self-prescription. Prescription is given by a doctor, what you have to do. You carve out your own self-prescription. Follow that. Sometimes you may need a coach, but people around you, don't have one person who's your ideal or a mentor. Have different people. Many people have positive qualities. You make one person your guru, you will imbibe the limitations also of that person. For different things, you have different gurus. Prepare your self-prescription and you follow it for the rest of your life. It's a tremendous yatra. Let me tell you that. So I am now told that this is a networking session. I told you it's not a personal development class. It's a personal disruption class. I hope I've disrupted a little bit for you. Now, anyone can, or let's do one thing. What do you suggest? We go one by one and you can introduce and give one line. Do you recommend that? Because it's supposed to be a networking class. I've hijacked it. I'm sorry. So can anyone, should we start one by one, each one? It's up to me. Huh? Heart attack. Yes, my friend, can you give me some views, please? Anything. एक mic दे दो यार. How much time we have? Up to 12? कितने बजे तक? 10-15 minutes. In India, 10-15 minutes में 10-15 minutes, 10 plus 15, 25 minutes.
Well,
बोलिए.
brief introduction. I am CA Pradeep Chandwani, currently tax person working in industry right now as a tax head of a family group company. This is my introduction. Well, heard you well, sir, and very impressed with your the portion on Riyaz bringing 30% of your time. Well, day to day lifeline, we are seriously, we have been trying to bringing up that habit, imbibing that habit of coming into reading at least on tax matters on a daily basis. But I think your point is well taken. It has to be a brick by brick. About phonetics, what you said, it's all about education. If you speak about my son, he started phonetics at the age of 3 or 4, and you see him speaking much well at his age. So I must agree that it has to be built brick by brick. So being a teacher, I think it is a great lesson for us today, and I think everyone has to take it home. Thank you.
Thank you, my friend. Anyone else who can relate to it, please? Should I say the courage to speak? I think that's the first thing. We sometimes think, कि मैं बात करेगा, we call it in management as self-assertiveness. Self-assertiveness means a reluctance to get up and speak. Because we feel that if we speak, we may speak something wrong, or the other person may not accept, okay, whatever it is. Yes, my friend. One in the last, but not the least.
Hi, esteemed colleagues. My name is Dhananjay Malkani. I'm a non-practicing CA I'm just a non-practicing CA, yeah. And I work in the family business. I'm really not thought about what I'm going to say. You said the word courage, so that kicked something in me. I said, no, I got to talk now. And we do jewelry business. So if anyone's interested in jewelry, please always reach out and I'll be happy to cater to you guys.
Very nice. Anyone else? The lady there? You will not speak. Firm, resolute. Anyone else, please? Here. कोई भी कोई एक आइडिया दे दो यार हमको. आपके नजरिए से क्या लगता है आपको? ये हमारा ज्ञान है.
I am Kamlesh Wakaria, chartered accountant, 66 years of age. आपने you made many points which are acceptable.
Yes.
But 1 or 2 points out of that which are not acceptable.
Great.
Easily. I think we can discuss that also.
Yes, sir.
You made that there should be many gurus, not one. So you have advantage of the many gurus. But generally, it is considered that when you are trying to make a one guru, you may not make any gurus. And you may not get a best of the one guru. And there are many views of the different gurus, and you are nowhere at that point of time.
Yeah.
So in our religion also, it is said that you should have a one guru and Ashirwad of a one guru only. So that is one point of view. You may be correct. I'm not trying to dispute that, but this is another perspective difference. Another view on the subject. And when we are trying to say that we should develop ability to speak well, ability to present ourselves well, there may not be any dispute on that part, but nothing can substitute the knowledge.
That is 70%. I fully agree. 70%.
And when you are with a full knowledge, and when your intentions are good, so they are well received by the other person. When anything which is spoken without any self motive and with the intention of a common good, it is well accepted by the other person, whether it is well presented or not. That is another viewpoint. I don't dispute that this quality should be
No,
developed professionally, but otherwise, when you see, then anything which is not self-motivated and it is for a common good, they are normally well received by the other person. This is a different view trying to be presented since you asked for that.
Give him a loud hand of applause because he stood up and articulated his views. Extraordinary. But I'm saying exactly that 70% is the core. It's your core competence. Most of you will have that. And I'll tell you, I don't know each one of you personally here, but you would be probably at about 50% or 40% of where you should have been destined to reach. Because that 30% is what is struggle. We study so much of our taxation, company law, FEMA, international tax. I'm a voracious reader. But I don't think in my area of mentoring and coaching, I would have reached anywhere only with that. And I've been practicing like a small, medium chartered accountant. But teaching was my passion and I dared to look differently. And for our profession, even to be within the profession, even before you plead before the authorities, why I love my practice is when I appear before the authorities. I recently appeared in one hearing and the commissioner wanted his son to enroll for my course. Okay. Because he felt that the presentation, the technical facts were there because I put 70% of my Riyaz time on that. But he wanted to enroll for that course because he felt that it would make a difference. I should also tell you that it made a difference to my case also in the submission. That is a fringe benefit, I can say that. So it develops your personality manifold. और ये 30% आपके पास नहीं है, जिसके लिए आपको दिन का 1 घंटा डालना है. And for that you pay a price of a compromised career. Just think what that inequation is like. You know? It's unbelievable. That's what I'm trying to put across to you. When I sit with sometimes I take for the directors in a combined way for a company, for training them. Each one has evolved like that. Unfortunately, you know, see the people who go to business schools, etc., they are coached to be different. They're told that this side of soft and hard skills complemented with your technical side, but the chartered accountant is more solid on the technical side. So when that 70% is so resolute with you, I think that 30% you make solid efforts from day one, put it together, put in 1 hour a day. My Riyaz will be 2 hours a day because I practice 2 professions. One of the chartered accountant, the other is a coach and trainer. So I need to do a lot of video watching and studying before I can implement that with the clients whom I train and mentor. That I need to do. Any other viewpoint, please? Yes, ma'am.
Hello.
Yes, ma'am.
Yeah, I completely agree that we as a chartered accountants, we really are very competent on 70% of our work.
Exactly.
But yeah, 30% of the personality, we are lacking somewhere. If you will tell a MBA to present a topic and you will tell a CA to present a topic, his core competency might be very good, but presentation, we are somewhere lacking and yeah, we need to work on it. That is what I believe.
Very good, ma'am. Thank you very much. Ek point. Yes, please.
I am an ex-banker and I used to teach at an MBA institute where majority students are engineers. When I used to teach them project problems and other our chartered accountancies problems, accounting and all that. So they say you need not teach all this because that will be carried out by that work will be carried out by a chartered accountant. We only just learn the concept actually, right?
Very true.
Setting paper also, you just tell us the theory part, right? Because and in companies, so as this lady said, it's correct because companies they are proactive. MBAs are proactive. So in presentation before top management, they are ahead there and chartered accountant like a back office person puts labor.
Bahar ka sanmay ka solid hai.
But its recognition is less. MBA gets more recognition.
You nailed it really.
And
Terrific.
What you said, no, that inherent skills are there that needs to be developed to be proactive before the public or a gathering anyway.
लेकिन इंडिविजुअल लेवल में हाउ डू यू डू दैट? सबको मालूम है वो, कोई भी चार्टर्ड अकाउंटेंट बोलो एमबीए आगे निकल जाता है क्योंकि वो सॉलिड प्रेजेंटेशन स्किल है उसका.
So what you said, no, that skill we have to add to that actually to go ahead.
Frankly, I don't address much of chartered accountants because mine is mainly corporate. But this opportunity which I got, because most chartered accountants, to tell you very frankly, I mean, I'm also a chartered accountant. We are happy. I'm talking about the small, medium chartered accountants. We are happy with doing more of compliance work. Even our clients, and अगर मैं टाइप इनके जाऊं client, वो client डर जाएगा फीस बढ़ा देगा क्या? ये बच गया कि फीस टाई का फैशन चला गया, मैं भी बंद कर दिया पहनने को. कोचिंग में मैं अगर कोट में देखे नहीं जाऊं तो उसको लगेगा क्या कोच है. Okay, so नजरिया अलग है. It's that way. But yes, please.
Sir, he's giving a very good point. He has also given. Are we not able to impress upon the people sitting on the dais? Can look, our future rest not on our skills of the debits, credits, payment receipts, balance sheet, P&L account, but by and large the impression in the society. Now, where the impression is created, first impression is created once an actor just walks in. He makes a huge impression. When we walk in, we say, oh, but when an MBA comes, he comes with a PPT, he comes with the projector, he comes with these things. They are not the end of it, that's the beginning of it. That's a journey which starts on a strong note. We are not able to impress upon our institute management and saying, look, if you want our future, my own analysis of my firm, or my colleagues or my members, where is our future? One line will be added by a chartered accountant or any other firm or by any other profession. Our career is gone. Now, how we will be able to retain if we are able to make our presentation skills very strong? Are we able to do that? Am I doing that? Are we moving in the directions or zero, big hero? And anywhere and everywhere only zero. So bring one before zero, make thousands of zeros ahead of.
What's your name, sir? What's
name is GD Arora.
GD Arora. Arora ने एक $1 million बात कही है. You can be the CA plus MBA. You will be the मुकद्दर का सिकंदर. और उसके लिए you don't have to do an MBA course. 1 घंटा रियाज, but your रियाज has to be properly structured. For that 1 hour, you have to, yes, please.
The institute had a program called the Academy of Accounting. It was a 6-week program which was included with the articles and which trained the chartered accountant for all this. I don't know why the institute stopped it.
No, it's a lifelong pursuit at a personal level, sir. Your yatra hai.
Yatra hai, but then it was
6
like
weeks
if it can be made part of the syllabus, if it can be made part of the curriculum, like they have the GMC and all that. If the 6-week program, it was only 6 weeks. 6 weeks can be extended to 8 weeks. I attended that program way back. It was a number of years back at the Kolaba Institute. It was a wonderful program designed so well. It taught you several things apart from all this tax and debits and credits and accounting and all that. You know, it really enhanced the personality of it. I don't know why the institute stopped it. What provoked it to stop it? I don't know.
Thank you very much, sir. Yes, we'll have concluding comments in 5 minutes. I think we have to wrap up. Yes, please.
So one guy came and said, Mr. Arora, you also can become top and head of it. I said, how? I don't know. He said, okay, you better don't know because you will not know. I said, but how? He took me out to Najara Society. They teach what? English speaking, public speaking. Do we have a curriculum part in our members institute? If yes, will it be a permanent or only for few weeks? If we can make the members who can really surge ahead and go on the dais and say, okay, I will address this person, come and talk. Am I capable of doing that? Or just sitting in a corner and watching in the...
Why should we be? I mean, brilliant people here, each one of them.
What I am trying
Geniuses.
to tell you,
Yeah,
seriously,
yeah.
what I am explaining you,
Yeah.
the future of the institute doesn't lie only into the strong knowledge of the tax laws or the FEMA or this, all that SEBI rules and all, but your presentation, as you said, you went to the CIT or the NHRC or the tribunal members. The way you made the presentation, 30% of the
Yes.
jobs were
It's
done
not,
suddenly.
it's not only what is voluble, that is spoken, even the drafting. There are times I just sit outside the department and I can draft very quickly, 1 page in less than 7-8 minutes, because that A to Z and Z to A and my word power, sentence power, that can be harnessed in unison and offloaded instantaneously. That each one of us have to do that. I'm telling you what, this is what I'm trying to tell you. I've seen that with managers happening right in front of me. In 3 months, I can see 25-30% transformation. But they have taken it very seriously. It's a commitment to themselves. Each one of us, if we do that, you don't have to go to an MBA. Just do that for 1 hour. But what to do, that has to be figured out. So that is my concluding part of my presentation. I wish for all of you a new beginning which will start with your own self-prescription. Thank you very much. Last but not the least.
Sorry, I don't want to have the last word. The last word will obviously be yours.
No.
I am trying to understand why this comparison between a chartered accountant and an MBA. Only for the presentation skills. That's about all. We've been listening to chartered accountants yesterday. We're listening to a chartered accountant today. You think he doesn't have presentation skills? Don't you think he can walk into any organization and get an assignment?
Sir,
I mean, what are we talking about? You're comparing oranges and apples. Why are we trying to demean ourselves by saying that we do not have the skill sets to make presentations and make pitches? I mean, I don't want to take names, but I will still take one name. My friend Narendra Aneja can walk into any organization and get an internal audit assignment just like that. And he's been pitching against, no offense meant, all the big four and yet getting the assignments. So come on, yaar, guys, come out of this mentality. ये big four क्या है, वो लोग करते हैं, हम तो MSME है, हम तो छोटा है. Come on, come out of this. You are not inferior. You guys have all the strengths. You guys, just because you can't talk English, खत्म हो गया सब. क्या बात कर रहे हैं यार हम लोग? I mean, the Prime Minister of the country talks English whenever it is required. Otherwise, he talks Hindi. So what are we talking about? Only English. That is what everything is all about. I'm sorry.
Yes.
But I need everyone to come out of this mindset. English is not everything. English is a medium of communication. You get one of your guys to draft what is required to be drafted here and let him make the presentation if you can't talk English.
Answering in your same coin, you have said what a motivational speaker says. That is fire in your belly. That is an extraordinary human being in you. This is that is this. Leave everything, come out of it. Uske baad kya? वो वहीं रहा ना.
That's what I'm saying.
वो वहीं रहा है. कहीं निकला नहीं है बाहर.
So the transformation, like you say, sir, has to come from within.
No, here we are talking about the road. It is not MBA. It is those skills which embody an MBA. What is the harm in acquiring those skills?
Sir, I want you to consider, sir, 1 second, sir. Right up. Just look at me, sir.
Discussion.
Sir, my point here is, I'm not saying we are bad or they are good. I'm saying 9 out of 10 chartered accountants are not very strong in the communications. 9 out of the 10 MBAs. Ek minute, sir. Please, you don't have to agree with me. Sir, Rao sir, please let me explain you something, sir. If you don't allow me to put my point, then there is no communication.
Sir, I respect the views of all the participants. Actually, इनका कहने का मतलब ये नहीं है कि आप इंग्लिश बोलोगे तो ही ज्यादा कम्युनिकेट कर पाओगे. इन्होंने यहाँ कहीं भी नहीं बोला कि आपको इंग्लिश आनी चाहिए. वो बोल रहे हैं जो भी आप बोल रहे हो प्रोनाउंसिएशन सही होगा, आपकी जो डिलीवरी है वो सही होनी चाहिए, आपका कम्युनिकेशन स्किल. उन्होंने कहीं ही इज टॉकिंग अबाउट कम्युनिकेशन स्किल. ही इज नॉट टॉकिंग अबाउट कि आपको इंग्लिश ही बोलना है या हिंदी बोलना है. ही इज नॉट टॉकिंग अबाउट दैट. आप जो बोलना चाहते हो सामने वाले को वो चीज डिलीवर होनी चाहिए ठीक से, प्रॉपरली। दैट इज द थिंग। हाँ, नहीं नहीं, इन्होंने ये भी हम नहीं बोलते। यस, that's true. I agree with you, sir. I agree, totally agree with you. No, sir. It's always there. It's not acting. Your performance will matter. But, sir, हाँ, yes. So अपने अपने पर्सपेक्टिव हैं, एक ही सिक्के के दो पहलू हो सकते हैं। तो अभी का जो भी सर सिनेरियो जो अभी हम देख रहे हैं यंग जनरेशन को, अभी आप मैं एक छोटा सा एग्जांपल दूंगी। अभी मैं उसमें नहीं माहिर हूँ, लेकिन फिर भी आज आप एक कोई भी शॉप करने जाते हो, चीजें कुछ भी खरीदने जाते हो, यदि कोई दुकान एकदम छोटी सी पुराने मॉडल में बनी हुई रहती है, सामान कहीं भी कुछ भी हैब्जेड मैनर में रखा रहता है, आप वहां सामान खरीदना ज्यादा प्रेफर करते हो कि जो दुकान अच्छे से सजी हुई है, थोड़ा लाइटिंग वगैरह है, उस दुकान में सामान ज्यादा अच्छे से खरीदने जाते हो? यस, क्वालिटी ऑल्सो है, क्वालिटी भी प्लस हम आजकल जो भी, यदि हमें उस दुकान के बारे में नहीं पता है, दुकान के बारे में नहीं पता है, तो प्रेजेंटेशन भी हम देखते हैं कि उसने सामान ठीक से रखा हुआ है कि नहीं। तो यस, वही मैं बोलना चाह रही हूँ कि एक बार घुसने के लिए, इंटर करने के लिए आपको प्रेजेंटेशन जरूरी है, उसके बाद आपका परफॉर्मेंस मैटर करता है। ओके, सो आई थिंक राइट नाउ द टाइम फॉर ब्रेक, एंड आई वांट टू थैंक्स सी अजय वासु टू यस।
एक लास्ट मैसेज, टाइम ऐसा आया है, वी आर एट द कस्प ऑफ अ सिचुएशन, कभी कभी लगता है कि प्रैक्टिस का फ्यूचर है क्या नहीं, ठीक है? इतना ऑटोमेशन हो गया है, बैंकिंग ट्रांजैक्शन टैक्स आ गया है, वेयर विल इट लीव अस? नाउ आई हैव नो फियर ऑफ दैट। व्हाई? माय क्लाइंट इज सो डिपेंडेंट ऑन मी फॉर एवरीथिंग। मालूम है, यस्टरडे व्हाट आई चेक्ड एक्चुअली, उसका जो वेबसाइट का जो भी कंटेंट है, दैट केम टू मी टू सी वेदर इट इज ओके और नॉट। Every Monday or Tuesday, I have to spend at least 1 hour. उनका जो headquarters US में है या UK में है, उनका जो report जाता है, they want me to browse through that, vet it, and see that it meets the standard of language, legality, commercialism, etc. Because I made myself so strong on that. The dependence on me is overwhelming. So when you develop these other 30%, you become an indispensable part of the SME. It will make a difference to you, that value addition that you bring, no other person. I'm never afraid that my assignment will go to someone else.
So the
झंडा गाड़ दिया है उधर, वो हिलेगा नहीं.
Sir, the point,
you make yourself an all-rounder of that type with core competence in your CA.
Yes.
That is my final submission.
Because if you ask me, the examination of chartered accountants is probably one of the most difficult in the world. Indian Institute of Chartered Accountants. I am talking of 40 years ago when we had a colleague, okay? His father was a partner in the firm. He was a London chartered. ये अपना टेबल टेनिस खेलता रहा, सीए पास नहीं हो रहा था. हमने मजाक में उसको बोल दिया, यार इतने पैसे हैं, लंदन जा, चार्टर्ड अकाउंटेंट हो क्या? वो होके आया और मेरा बॉस बन गया. So the important point is you have to make sure that you are indispensable. I will take the indulgence of the speaker and give one quote. कहते हैं, खुद ही को कर बुलंद इतना कि हर सजा से पहले खुदा बंदे से खुद पूछे, बता तेरी रजा क्या है?
So with this good notes, I want to declare a lunch break. After 45 minutes, we will be here and our speaker would be here for CARO. But it's a very interesting session, CARO. And on the occasion of Akshaya Tritiya morning, we had our past president and past chairman with us. And after the break, we have with us our committee chairman, CA Sripriya Kumar ji with us, and CA vice chairman, CA Durgesh Kavra ji with us. So we request you all to welcome them with good round of applause. And yeah. So, madam, welcome you. It's great that you had joined us virtually. And may I request you to address our participant?
To the chairman of the branch, to the chairman of the region, I'm sorry, to Pinky ji, Hemal Shah, Nilesh ji, and Mr. Mukund, and of course to Durgesh Kabra ji, who's been more than a vice chairman, an absolute mentor. Here's a very, very hearty good afternoon to all of you. And I'm so sorry I've not been able to join in this conference physically because of other commitments that I had made. But I promise that Durgesh Bhai and I will definitely do a very, very good one more conference before the conclusion of this year. So to start with, I happen to chair the Corporate Laws and the Corporate Governance Committee, and Durgesh Bhai is actually the de facto chair and I'm the de jure chair. It's very nice that these conferences are being held. I think what's the difference in the last decade or so is the amount of change that's happening. And I don't mean change in a letter of law sense, but in a spirit of law sense. We see a lot more information sharing, a lot more enforcement, and a lot more requirement to comply with the spirit of the act, both through a scheme of deterrence and through a scheme of proactive detection in terms of picking up errors that are going around. So it's in that context, I think these conferences make a lot of sense because it's always easier to hear and learn and see and learn rather than, actually having to read it all. And there's so much to read today. So I thought in terms of my own speech this afternoon, and Pinky ji had mentioned that post-lunch sessions are difficult for the participants. Let me assure you that post-lunch sessions are equally difficult for the speakers. So we're also after a lunch, but we'll do our best. I think I'm just going to present maybe one or two perspectives on the topics that are here today. The first one was about Schedule 3. What's different about the Schedule 3 today is that I think it's transformed financial reporting to management reporting. Typically, one would look at things like aging of capital work in progress, other aspects that are covered in Schedule 3, which I'm sure the speaker has dealt very well, more in terms of a management report, aging, ratios, analysis, etc. But you find all that getting embedded in Schedule 3 reporting itself, with the auditors having to comment on it as part of our true and fair opinion, which principally means only two things. One is compliance with Schedule 3, and two is that the financial statements are free from material misrepresentations. So I think that's the interesting change about Schedule 3, which is really relevant and needs to be complied in the spirit of the legislation itself. The second thing is about fraud risks. So if there's one topic that's dominating boardrooms today, it's not compliance, it's fraud risks. And if you've seen the number of papers that have, orders that are being put out by almost every single regulatory authority in the country, I think there's a lot that the audit fraternity can do and must do in this area. So we've come a long way from where we started. There was this Kingston Cotton Mills case, and then people said, no, we're only watchdogs, we're not bloodhounds. But let me tell you one thing. I think there is a significant change in audit perception today. And I think it's very relevant for what we face as a fraternity. So sometime back, they'd say, okay, oh, there's a fraud, there's a fraud. Today, when somebody says, okay, there's a fraud, where's the auditor? And there are some very interesting papers that you must, sort of go through. It's the very recent NAFRA order on Cafe Coffee Day. There are SEBI orders on Cafe Coffee Day. There is a SEBI order on the Axis Bank. But in all this, from whatever the limited reviews that I have done and seen, I find that an auditor's approach to fraud risk need not be hyper technical. I think it's very, very common sense driven. Let me give you a small illustration. A lot of us are auditing these small companies, or what we believe are small companies, 20 crores, 30 crores turnover. You find that there is an investment somewhere of about 10 crores. This company has taken money from a bank and invested it somewhere else. Now, would it not strike us to say that, look, if I put some money somewhere, either it should get me a dividend, or it should get me an interest, or it should get me some form of capital appreciation. I need to be called in as a shareholder to the AGM. The investee company in which I have put money, or my client has put money, should be relevant. It should be existing in the NCA records. Now, once you open your eyes to this kind of thing that you see in the balance sheet, I've come across cases where shareholders are struck off companies. And this actually gets you back to why the government actually changed Schedule 3. So that's my second perspective, to say that fraud risk assessments by auditors are not very difficult to do, and they just demand a very commonsensical approach. So you just think that you're the owner of the company, you're the shareholder, it's your money. And then the fraud risks just fall out automatically. A third is talking about internal audits. Again, in this compliance landscape, I find that internal audits are going to become big time. And in what I speak, there is also one more relevant aspect, which is to say that fraud risk assurance engagements will be standalone, large engagements in the future. So if some of us feel that we don't want to do too much attest, I think it throws up a fairly large practice opportunity for all of us. It's actually a ditto with internal audit. Again, internal audit, the entire landscape has changed. It's no longer vouching driven. It's not to see, okay, I have a PO, go tick, I have a GRN, go tick. I have a payment, go tick, and then I'm done with internal audit. That was transactional internal audit. Today, the focus is on risk-based internal audits. However small an entity is my internal audit process addressing risks? And another very interesting thing I found is the change in CARO. Now, 138 of the Companies Act talks only about companies which get covered under 138. But CARO says for every company. It says, I have something which is commensurate with the scale and size of operations. I have an internal audit process. And not only does the government say, do you have an internal audit process? They also ask you whether you've reviewed the reports. In my view, I think internal audit is there for all categories of companies where CARO would anyway apply. Increase in responsibility and liability of board members. That's another huge practice area for chartered accountants. Right across the spectrum, whether it's a small company, a mid-sized company, or a large company, there's a lot of emphasis on the role of boards today, because they typically are the trustees and fiduciaries of the shareholders of the company. How many boards are aware of their responsibilities today? I would think very few, other than those typically very large companies which come in with independent directors who are super competent and super efficient. And I think this board oversight should not just be looked at from a risk perspective. Can chartered accountants as business advisors enable boards to look at strategy, to look at risks, to look at financial reporting, to look at HR, to look at IT? Do you have audit trails coming in today suddenly? Can we assist in all these aspects of board oversight spanning strategy, risk, IT, operations, HR, compliance, etc. And that will be very nice for us to kind of come in. The next topic that was discussed was audit trails, which I found very interesting. If you go back, we already had ICOFR. So as an auditor, you were required to certify internal financial controls over financial reporting. So in fact, this used to be my very long pending question and a long pending doubt. I used to say, okay, as an auditor, how am I saying internal financial controls are hunky-dory when in Tally I can go and delete anything and add anything and just make changes to almost everything, starting from as basic as cash balances. I think today there must have been obviously, no legislation is truly proactive. All legislations are reactive. And I'm sure this audit trail change which came, and another very interesting change that came is for the books of accounts to be maintained in a server in India. These two things again go to dramatically define the government's, need or a fear, if you may, actually, to ensure that corporates comply both in the spirit and the letter of the law. Now, in terms of this change, I think it's very important. And our role as auditors come in later. It comes only for financial statement periods beginning on or after 2023, but the management responsibility starts now. And the trail software change is very simple. It starts by using the term every company. So whether it's OPC, small, private, dormant, whatever, section 8 as well, audit trails are mandatory. So I think this is again, I don't think we should only look at this as, am I the auditor? Am I getting this right? I think again, for clients where you're not conflicted, this is a huge business opportunity. I think there would be need for independent reviews of audit trails. Even auditors who are signing the balance sheets would feel very, very comfortable if there was somebody else who's also done some amount of trail checking. So that's another. So the only thing I'd like you to look at is from all of these webinars or these seminars that we hold, don't just look at this as an auditor's obligation. I think with the kind of compliance landscape that's happening in India, I think we should look at every single change in the act or every line in the act as a practice opportunity. And I would not at all be wrong when I say that as a chartered accountant, you are perhaps better equipped to do anything else in the ambit of the Companies Act than any other professional, whether it's a company secretary or a cost accountant, whose roles are somewhat limited by what their course structures are designed for. And then, of course, related party transactions. It's always been a challenge. How do you establish arm's length? How do you determine? See, today, in fact, somebody was talking to me and they said, okay, Priya, what do I do as an auditor? There's a board that's approved it. Everything has gone right. They've been able to demonstrate it's in the ordinary course of business, etc., etc. But again, here I go back to point number 2, which was on fraud reporting. Today, the expectation of an auditor is to demonstrate and apply common sense and professional skepticism. It's in that context, aspects such as RPTs become relevant. Today, and again, very interestingly, this Companies Act enshrines the concept of control. It goes far beyond, those, structured definitions, 2% ownership, 5% ownership, 20% ownership. It uses the term anybody on whose instructions the board is accustomed to act. Typically, I'm sure it's true of the entire world. There'd be somebody sitting on the 5th floor of a building, white office, white kurta pajama and white footwear. And from passing a 100 rupee voucher to a $5 million investment, they'll say, okay, we have to consult sir. So, sir, we'll have to talk to him. So that's this concept of related party. And you need to examine just far beyond what your textbook actually asks you to do. And some of the larger areas of frauds, etc., generally come into these RPTs. And today, when I speak of frauds or RPTs or whatever, today, what is the biggest challenge in an audit? Is it the ability to audit books and records? Is it the ability to find a voucher? Is it the ability to tally things numerically? I think the market and our clients have got it all right. When you do a normal audit, the chances that you will be able to pick up an exception are so low because just like you've been auditing a client for the last 10 years, 12 years, 15 years, whatever, other than those cases where rotation came in, the client knows, okay, the auditor will look at this, so please keep all this ready. I think the biggest challenge that, in both the context of corporate governance and in the context of the audit profession is this wonderful term that's called management overrides of controls. There's just one click, and then there's just one JV that's gone. One surreal, one virtual depot gets opened, stocks are moved. One share pricing is done wrongly. and one diversion to a promoter's personal account. How do these happen? They don't happen typically from your AGM finance to GM finance to, it happens at a much higher level. And I also find very interesting, you have something on expectations from internal auditor, an independent director's perspective, and a panel discussion. And I think you have a terrific panel. In fact, I've seen all the speakers are very, very high quality, and thanks to Arpit ji and Durgesh bhai to enable this. We've got Chitale sir, Atul Bheda ji, Sandeep Jhanwar, Hemal Shah, Sandeep Shah, Shashank Karnarji, Mukundan KV, Rajdeep Samdaria, Vikas Kasat, and Mr. Subramanian. So yeah, so internal audits are going to become important. Why? Because as I started with, risks and fraud agendas dominate boardrooms more than sales strategy or compliance agendas. And of course, CARO. How can we live without CARO in a program? Again, a lot of changes. The only insight I'd like to present on CARO is, today, don't take a chance. In fact, I used to find this very amusing. When I was even doing my articles, they don't deposit PF on time. And then we'll say, okay, generally they've been depositing PF dues on time. I don't understand, where is the general? Either somebody is getting it right or somebody is not getting it right. So I think our reports must be truthful and brutally frank, because a lot of times whom we seek to protect gets into a problem, and then it sort of bounces back on us. And in all this, there is just one overriding theme. In India, you have a choice of doing business in whatever form you want to do. You can be a sole proprietorship, you can be a partnership, an LLP, an AOP, a BOI, you can be an unincorporated joint venture, you can be a trust. But I think the writing on the wall is very clear under the Companies Act. If your client chooses to make the corporate form of organization, which is a company under the Companies Act, then this is a law that must be complied. If the act tells you 4 board meetings, you have to do 4 board meetings. If your act tells you independent director, do it. If your act tells you you have to have a cash flow statement, everything. So this is something that the client has to evolve. The client has to understand that if he seeks the benefit of a limited liability form of organization, this is the law. So with these, I'd just like to conclude by just coming up with one idea, which was quintessentially Durgesh bhai's, and I thought it is a nice initiative to take on from the committee. And as you'd be well aware, the committee is assisting the MCA in the version 3 project, which Durgesh bhai will speak more about. And we've been assisting them continuously for about a year now, a year and a month. You may ask us, Priya, you're telling us that you're assisting, but there are so many problems. In my view, and again, can also say the same thing for Durgesh bhai, both of us completely concur that this portal is good for this country. Version 2 permitted, a lot of transactions without validation checks. It did not even need you to associate your DSC. So somebody would just sign a form with some DSC and just disappear. You need not have to disclose your credentials. Can you imagine a banking transaction like that? Can you go to the bank and just sign one check and say, pay the money? No, the bank says, please identify yourself. I think in that sense, I think version 3 is something that I'm very appreciative about. And again, it's not easy to, repair a running aircraft. So we've been very sympathetic towards this cause of trying to help them. And so we've set up these helplines where about 30% of the queries we are able to solve. Where somebody comes and says, I don't know how to attach my DSC, or I don't know how to associate myself, or basic challenges, which are a good number, 25 to 30%, we've been able to address. Those which are systemic issues. And the key problem in V3, or the benefit of V3, is that it validates the data. It's an online filing system. So I have seen cases where somebody filed a partnership as 33, 33, 33. It adds to 99. Now, when you go back, the system says, no, you're not 100. How can I accept your form now? And this is only elementary, but needless to say, there are other bugs, etc. But the only thing I'd like to say is the MCA has taken this very seriously. And it comes right at the secretary level. And he used to have weekly meetings every Monday, where the ICAI was also present. And I must also place on record my sincerest thanks to Mr. Debashish Mitra ji, who was the president, and Aniket bhai, and the present president, Mr. Aniket Talati as well. For having consented to give us a 15-man team, which we are offering pro bono to MCA. So we worked with them through their entire process, and in that sense, hopefully, we have made the lives of our members also a little bit easier. And the last thing I'd like to speak about is this is 10 years of the new Companies Act. A Companies Act that was diametrically different. That's very, very different from the 1956 Act, both in terms of its penal provisions, which of course have got successively diluted, and the kind of governance that it brought in. So Durgeshbhai had proposed that since we had done 10 years, the CLCGC should come out with a very nice report on suggestions and changes to the Act. And if you may, something like a critical analysis of the Companies Act in its entirety, its rules and its forms, and to examine it only from two key perspectives. What can be done to this Act to enhance governance? And two, what can be done to this Act to enable further ease of doing business? And we'd be very happy. We are going to put out a lot of study groups and roundtables for this. Durgeshji will, I was very, very happy with this initiative that he had proposed. And honestly, between the two of us, I'm not so much the person who is able to, get collective views very quickly. And there I find Durgeshbhai has been a huge pillar of support. In fact, I've borrowed a lot of ideas from him last year in the CAQ that he was a very successful convener of. And every time I look at the AQMM, I am so impressed. So much so I've asked my own office to start doing this in right earnest. So with these few words, thank you very, very much for this wonderful initiative of yours and for this time given to me. Thank you.
Thank you, ma'am, to share with us your word of wisdom. Now I request our Vice Chairman of the committee, CA Durgesh Kabra, to share his word of wisdom with us, sir, please.
Good afternoon, one and all.
Good afternoon, sir.
The chairperson of the Corporate Law and Governance Committee, Shri Priya Kumar. Then chairman of WIRC in virtual mode, Arpit Kabra, regional council member, Pinky Kedia, the past chairman, Govind Goyalji, the others from the dais, speaker, Hemal, Shah, and Nilesh, Mukund, and my dear professional colleagues. It's indeed a pleasure to be part of this national conference as the vice chair of Corporate Law and Governance Committee under the leadership of the very dynamic Chair Ma of, normally when we talk now, so she says you are chairman and I am Chair Ma, and everybody know what is the importance of Ma in one's life. So she is Chair Ma. We respect her a lot as far as the corporate law and governance is concerned, also the insolvency and bankruptcy code too. And let me tell you, our association with the Ministry of Corporate Affairs was negatively impacted in last 4 or 5 years. Somewhere relationship was not to the extent which it should have been, but with the efforts of Shri Priya Kumar, we are having today wonderful relationship. The new version of LLP filing and version 3 for all forms filing under her leadership last year. If she was there in Delhi for, say, suppose 180 days, of 180 days, she has spent 120 days in Ministry of Corporate Affairs just to see that our colleagues doesn't face the problem. We had continuous meetings with the L&T Info and Ministry of Corporate Affairs, Joint Secretary, Mr. Manoj Pandey and Secretary. At that time, Tarun Bajaj and now Mr. Govind. And let me tell you that it has been well appreciated by Ministry of Corporate Affairs. And now whenever we would like to go and meet, and especially when Sri Priya Kumar is with you or with us, you will get the red carpet welcome in the Ministry of Corporate Affairs. That's what the relationship we have developed in past 1 year. They are listening us on the various issues, whereas the time was that we were not being listened properly. Today also, our 15 persons are working for the project which we have taken with respect to the version 2, and approximately more than 6,000 issues have been raised by various members of our fraternity to us, and we are trying to resolve. We are giving daily report in the Excel sheet to them where these forms have got stuck up and what is the resolution available. So having the continuous meeting with them, we are trying to resolve all those, and majority of problems have been fixed. There are still some problems, and we are hopeful that those also will be fixed very soon. The another important things, as she has told with respect to the group forming, where we would like to have the representations with the Ministry of Corporate Affairs, that the Companies Act, which is there today, which are the provisions which are creating problems to the entrepreneurs or to the professionals, and they are the hindrance and ease of doing business. Today, when the India is striving for the 5 trillion economy by 2025 or 26 latest, or by 2047, we would like to be the second or even the first economy with a target of $30 trillion economy. Then in that scenario, it is very important for us that we work into that direction, and Sri Priya Kumar, myself, and the secretary of the committee are putting their best efforts. The representation is must. They are listening. Even we have discussed for the opportunities, how can be created for the chartered accountants. We had a discussion very recently, 3 days back in the ministry, that please let us know there are 40,000 vacancies for the independent directors. How these vacancies can be filled by the professional like us. If he comes to know, they are going to provide us data, and we are going to give them the full proposal that how chartered accountants who have completed their 10 years into the practice or having the membership for 10 years or so, they can be taken as the independent directors into the various companies. So one non-compliance of that corporate will get over, and we would be in a position to add value to that company. Second, as far as the women directors are concerned, for that also we have requested. And they said, yes, you please give us the proposal. We will definitely share the data with you. And you see that your professional colleagues gets an opportunity into it. We also had a discussions with them. We have provided 15 persons. These 15% are working for the betterment of this version 3. But we have told that we are going to provide you 150 chartered accountants. Young chartered accountants who will be working with the Ministry of Corporate Affairs. They pay only 40,000 rupees. Whereas we have committed to young chartered accountants 9 lakh rupees per annum, which is approximately 75,000. Whatever the deficit is there, probably it will be taken care of by the ICAI. But we would like to see that when they are doing any scrutiny, they are going for any inspections, and if any analysis is being done, then it is done by the professional who understand the audit, who understand the accounting standards, and unnecessarily our members are not being harassed. So this is how we have agreed, and they have appreciated a lot for these 15%. So they agreed that you please provide 150. We will employ your all 150 in our organization, and we'll see that the problems which are there today are got minimized. So this is what we are going to do over there. Beside that, there are many things which can be talked to you. But one thing which I would like to talk, though we are working on the opportunities for all of us. But the role of the institute is of the regulator. It's written in the preamble of the ICAI, of the Act itself. And I request all of you that please don't expect opportunity, though we are working on it. And you feel that you are going to be regulated and perform accordingly. Today, the problem with all of us is the audit is not being taken seriously. If this would have been a seminar for tax or for the GST, probably the whole above would have been full with 400%. But, and I have seen GST, 2 national conferences of GST in this, the Thakur hall was full, which was of 650. I do not know why it is so. Our existence is because of the Companies Act, and we are not serious about the Companies Act. Our opportunity, we are known because we are auditor, and audit is created through the Companies Act. But we are not serious at all in this. I do not know how many of us knows that the standards on auditing are mandatory. Are you aware? Standards on auditing are mandatory for all of us. और अगर है तो कौन से एक्ट में है? इनकम टैक्स में, जीएसटी में, कंपनीज एक्ट में, या इंस्टीट्यूट के रेगुलेशंस में? So Companies Act has mandated accounting standards and auditing standards mandatory. Accounting standards for financial statement preparers, auditing standards for we professionals who are doing the audits. But I can bet on it, none of us would be knowing the exact number of the standards on auditing which are there, and these are mandatory. कोई बता सकता है क्या? हमको तो आती है ऑडिटिंग, पहले दिन सीखे हैं, करेक्ट ना? बहुत आसान काम है ऑडिट करना, 2 टिक लगाने, एक इधर और एक उधर. But let me tell you friends, it is said by our immediate past president, Debashish Mitra ji. I do not know whether you have read it, you have listened it. It was in the newspaper. Audit is serious business, and it is for serious people. If you are not serious, please leave the audit and do other consultancy work. There are a lot of opportunities available in the other areas also for the chartered accountants. But audit is serious, and it has to be taken serious. Otherwise, Madam has told that CCD case, ILFS case, and there are other cases are there. See the CCD. In total 26 crore penalty. Chartered accountant got a penalty of 1 crore. A small chartered accountant like us, if has been penalized, what will happen? We will vanish. So be careful about it. Take the audit profession, assurance profession as serious as it should be, and think of start charging the right fees for the same. We feel insecure ourselves that if I increase my fees, what will happen? My client will go. Let him go, yaar baba. मेरे से प्रदीप के पास जाएगा, प्रदीप से विकास के पास जाएगा, विकास से राम के पास जाएगा. क्या फर्क पड़ता? It doesn't make any difference, but it will move among the chartered accountants only who are into practice. And now in the present scenario, only 7% chartered accountants are coming to the practice. 93% are going to industry or starting their own business, startups, or getting enrolled into their family businesses. This is what is the ratio. India is driving towards 30 trillion economy in next 25 years or so. And a lot of opportunities are available. Why we should worry? Do the work with the quality. Audit quality maturity model has come to gauge your maturity, your firm's maturity, which will build your capacity or the capacity of your firm. And I feel proud, ICAI feel proud that we have started leading from the front. The days were there when we were conversing or we were adopting all international standards. But today, internationally, they are following audit quality maturity model. We are the first to develop this audit quality maturity. None of the other country has developed it. We have developed sustainability reporting maturity model. None of the other institute has developed it, and it is being followed by the other countries, including all developed countries. Digital competency maturity model, we are leader. It is being followed by them. Then UDIN, we are number one. All other countries are following. We are number one. And forensic standards, we have set up the forensic accounting standards, and all others are following. So the time is changing. India is going to lead the profession even. So my humble request to all of you, do your business seriously, and your business means auditing and assurance business. With this, thank you very much for giving me a patient listening, and hope that you'll take it seriously. Thank you.
Thank you, Durgesh-ji, to share with us what we expect for our CA and what we have to do. And rightly said by Durgesh-ji, we can't follow the standard on auditing, or we can't face the challenge with CARO reporting. We should leave this part, and we should take a better another opportunity, I can say rather. So thank you, Chairman sir and Vice Chairman sir of the committee, to be present with us. So now we will start with our second session, and the session, our speaker is here. I would request CA Mukund to introduce our speakers from Lisa.
Thank you, ma'am. Thank you so much. Thank you, Durgesh sir, for pointing out all the importance, and we have to serious in our business. So there is a term called that my business is my business, none of your business. So I think we need to follow that, and we need to more serious about our ethics and our work culture, and whatever is the need of our. And so having said this, I would like to introduce our speaker of today's seminar, which is CARO. As you know, there have been many changes in CARO, and sir is the best person to hear on this topic. So sir's name is Hemal Shah. Hemal Shah has 20 years of professional experience in audit, including financial reporting under Indian GAAP and IFRS. He is partner with SRBC and Company, which is member firm of EY, and he has been doing this since almost 2 decades now. Over these years, sir has gained extensive experience in serving large Indian as well as MNCs across various industries. Sir is a regular speaker in various professional forums and accounting and auditing related topics. He is the Vice Chairman of Accounting and Auditing Committee of the Chamber of Tax Consultants. He has contributed to various articles on accounting and auditing related topics in general for Chamber of Tax Consultants. And another major reason for us to have Sir on this topic is that he has co-authored the Chamber of Tax Consultants joint publication, The Taxman on Comprehensive Guide on CARO 2020. He has also co-authored background material on ICAI's Executive Master Program for New Age Auditors. So with this, over to you, sir. It's a great topic and we are all honored to have you between us. And yeah, over to you, sir. Thank you.
I would like to request Durgesh sir to give a memento as our love and affection to our speaker.
So, thank you to the Institute, to the WIRC Council for giving this opportunity. When I entered, I think got quite a few friends. So, Mr. Durgesh Kabra, of course, we have been interacting since past couple of years. And in fact, he was the one who gave me opportunity to work on one of the initiative of the Institute, which was New Age Auditor Program. So, thank you, Durgesh ji. Nilesh bhai, Vasa. So, you know, I didn't notice he is there. He is my Jiju, by the way. So generally we don't meet, but I mean, the meeting frequency is quite low, but with the Institute platform, I think it's great opportunity to again meet. And Vikas, Kasat, of course, you know, we have been working together. His partner from BSR, a member from of KPMG. So a lot of interaction with Vikas, Kasat also. And I'm glad he's there. So, you know, if there is any bouncer, I can just, you know, throw it to him. He will answer it. Yeah. Okay. So coming to the topic, friends, CARO 2020. Of course, it's a new topic, but as such, subject is not a new subject. You know, Companies Act 1956, when it was introduced, initially, the role and responsibility of the auditor was limited to numbers to give true and fair view, right? But over a period, it was felt very necessary that, you know, the auditor's responsibility should not be restricted only to the numbers or true and fair view, but more and more proprietary aspects, which are very critical to various stakeholders, including the shareholders, including the borrowers, bankers, you know, directors. So some of this information which are critical should be checked by the auditor, and auditor should comment on those particular clauses. And that's why initially in 1988 we had, or in fact 75, we had a Mao CARO, which again got revised into 88 in 2003. And then finally 2016 and 2020 also. So what has happened is over a period of time, you know, the regulatory environment is changing. The business are becoming more and more complex. Yeah, there are complexities added by the business, and also, you know, whatever frauds or whatever irregularities are noticed in the professional world, in the business world, those are, you know, aims of the government or regulatory authorities to inbuild and have some solution, either by, you know, changing the regulation, changing the law. So for example, Companies Act 2013 is a direct outcome of multiple frauds which were noticed in last 2 decades, especially, you know, the Satyam fraud or ILFS fraud. So many of those changes were brought in by, you know, because of this fraud. 2013 had multiple provisions to avoid this kind of situations in the future. And similarly, there were few responsibilities which government thought should be casted on the auditor to comment, and that's why CARO 2020 was revised. Now, few of the things, you know, which were critical from Schedule 3. So of course, you know, the management would give disclosure, but the government felt some additional comfort will come only and only if the auditors sees those numbers, sees the situation and comments on it, right? So that's the another reason why CARO 2020 was revised. So before we start on CARO 2020, I'll spend, you know, a couple of minutes on the entire audit report. So of course, CARO 2020 is changing, but it is not only CARO 2020. the main audit report itself is undergoing a change, and there are significant changes. So let's spend some time on the main audit report, and then of course we'll come to our main topic of CARO 2020. So what is changing in the main audit report? So main audit report, of course, it talks about the books of accounts are maintained properly. The balance sheet is tying up with the underlying books of accounts. But now there are a couple of new clauses which are added, which will kind of, deal with it. ICFR, the report on internal control over financial reporting. Again, there is no change. It remains the same. And then you have other paragraph, on the reporting requirement of other information, which was, introduced a couple of years back, 3 years back. Again, then there is no change, right? Now, on the right side, what you see is comparison between CARO 2016, just earlier version, and CARO 2020. So CARO 2016 and CARO 2020, if you compare, near the size wise, it has gone up significantly, right? So earlier, the CARO 2016 had few clauses. Now, if you add main clauses and sub clauses all together, CARO 2020 is going up to 50 clauses, right? Many clauses have been newly introduced for the first time. Those were not there in the past, completely newly introduced. There are few provisions where the requirement was there, but the reporting requirement has been enhanced in CARO 2020. And just one clause has been dropped. Now, what's the reason for dropping that particular clause? Is also there was a duplication. So managerial remuneration, that reporting was triggered in the main audit report also, and there was a reporting due in the CARO also. So of course, there was a duplication. To avoid this duplication, CARO 2020 dropped only this clause. Apart from that, there is no deletion. Either the clauses have been added, completely new, or the clauses have been enhanced to kind of, add more responsibility on the auditor. Yeah. Okay. So when we talk about the main audit report, which is under 143.3, these are the, is it good? Okay. So these are the points, which are, we need to report as, as an auditor, have you obtained all the information, proper books of accounts have been maintained or not. So those all clauses remain same. There is no change. What is the change is, in the blue highlights, which you see in the last 3 bullet points. So reporting of the transaction with benefit to ultimate beneficiary. That's a new reporting clause which has been brought, and compliance with dividend norm. So earlier, even this clause was not there. This has been brought, and now this will be the second year, March 23, where this would be applicable, right? There is one more clause about the audit trail. Now, initially, this was to be applicable from this year, but of course, there was a representation made that there are multiple software which does not have mechanism to track the audit trail, and hence, you can't make it compulsory immediately. The corporate should be given a sufficient time to come out with some solution, and hence this announcement was deferred to 1 year. So this particular requirement, only the last requirement about audit trail, will be coming from the next year, right? But otherwise, transactions with ultimate beneficiary and dividend are applicable from last year and also from the current year. Yeah. Why I highlighted this is, at times the entire focus of audit firm is only on the CARO, and inadvertently, these 2-3 clauses which are coming in the main audit report are completely missed out, because generally it should not happen, but at times the report of the last year is taken as a base, and the changes are made in that. Now, unfortunately, if this omission is there, it's very serious omission, because it's a regulatory requirement to comment, and one should not miss out this critical information. Okay, so notified from April 21, again, when it is applicable, so it was applicable from any financial starting from April 21. So for December accounts, it would be applicable in the year 22. But anyway, that has also gone. So now it's applicable to all the companies, irrespective of any criteria. So for example, CARO has applicability criteria, but the main audit report is applicable to all the companies irrespective of the size, right? So this main clauses which are introduced in the main audit report about ultimate beneficiary, as well as about dividend distribution, compliance with dividend distribution rules, are applicable to all the companies. Okay. Now, what is the clause and what is the reporting requirement? So the first clause is about any company who has borrowed the money with an intention to give this fund to ultimate beneficiary, either in writing or otherwise, then those transactions auditor needs to examine and report. Now, what is the objective and why the government has introduced this topic is, there were multiple fund diversion used to happen in the past. So companies used to borrow the fund, right? And then this borrowed fund from banks were given to a third party, to either the group company or other companies who are not associated. To avoid this fund diversion, the government came out with a rule. So one is its investment, and also if the amount is borrowed, it is used for yourself, for the company's own business purpose. It is not diverted to a third party who is ultimate beneficiary. If it is, then the auditor has to report, right? Now, first of all, the management has to make this assertion in the notes to accounts, because finally, and first of all, it is the responsibility of the management to give this confirmation in the financial statement. So management will give a confirmatory statement in the notes to account saying no funds have been raised and no money has been invested or borrowed, given as an advance to a third party, with an intent that that party will give the fund to the other party, ultimate beneficiary, right? That assertion first will come in the notes to accounts by the management, and auditor will have to comment that, first of all, based on the representation from the management, and further any procedure which auditor feels necessary, auditor deems necessary, based on those procedures performed, he has also not encountered anything otherwise, right? So this is the comment. Okay, so just give you an example. Company 1, in the step 1, company A borrows 100 crore from bank in November 21, right? In December 21, company A invests 10 crore in equity share of company B, which is intermediary, with an understanding that company B would provide loan to company C. Now, if you have this kind of situation, then reporting under this clause will trigger, right? The whole objective of the government is to stop fund diversion. So if you see this kind of situation where the fund has been borrowed by, company, for example, in company A from either bank or institute or otherwise also, and those money are further diverted to another company, then reporting will get triggered, right? Now, ultimate beneficiary has to be defined, at the time of giving the loan, right? If the objective is to kind of divert the fund to another party, that reporting will get triggered. Time gap between when the intermediate company has raised the fund or has raised the money and when it is given to the third party is not critical, right? So there could be gap of 3 months, there could be gap of 5 months. In fact, the amount may not be exactly equivalent. For an example, in this case, the amount borrowed is 100 crore, right? And what is invested is only 10 crore. So to the extent of 10 crore, there is a mismatch and the reporting will get triggered. Declaration of payment of dividend. So again, this has been brought in the new audit report, in the main audit report. The company needs to see whether the compliance with the dividend distribution rules have been complied by the management or not. Now, dividend includes interim dividend. So there are multiple rules, especially, if the company is declaring dividend, when the company is not in profit, then someone has to, basically see whether the company has complied with the rules, which are applicable when the company does not have profit. So there are particular set of rule that, how much amount of reserve can be withdrawn and what liability first should be provided before declaring the dividend. So if someone is declaring dividend out of the past profit, right, the dividend distribution rules will trigger. Even if someone is declaring dividend out of current year profit, still the dividend distribution rules would be applicable, which would basically mean that, as per the dividend distribution rules, first of all, the liability of the dividend has to be deposited in a separate bank account. And from that, the money will flow to the shareholders. And if any amount remains unpaid, then that unpaid amount has to be transferred to Investor Education and Protection Fund, right? And this same rules will apply to interim dividend also. So all this compliance with rule will get triggered. and auditor will have to comment whether, whether for the final proposed dividend or for interim dividend, those rules have been complied by the management or not. Okay. Now, secretarial standard also has given rules. Of course, these are procedural also. So those rules, whether those are complied by the company management, that is also one of the thing which auditor will have to check and comment. One typical question, and generally that question is asked, is whether if the company is paying dividend out of P&L appropriation balance, P&L credit balance. So it is not transferred to any reserve. It is not transferred to general reserve. The fund is lying in profit and loss credit balance. Will the rules still be applicable? There, the answer is no. The reason is, if the payment of dividend is made out of reserve, then these rules are applicable. What is reserve? Reserve is something, where any reserve is created by transferring from the profit and loss to this specific reserve. So like general reserve or any other reserve. But if the amount remains in the profit and loss credit balance, then those rules are not applicable, right? So if the company has, huge balance in, profit and loss credit balance, which is not transferred to general reserve, right? But subsequently, for example, in March 23, for whatever reason, company incurs loss, but it has 100 crore in profit and loss credit balance, out of which, say, it declares dividend of 20 crore. Still, these rules will not be applicable because the company is not declaring dividend out of reserve. Company is declaring dividend out of P&L credit balance or P&L appropriation balance. Audit trail. I'm not going to spend much time on this because there is already a subject by itself and Vikas is going to cover that. So we will hear him when he covers this topic. But again, I won't spend much time, but just to kind of introduce the topic. The requirement is the audit, the accounting tool now should have a trail of any adjustments or any entry which are recorded or deleted. And auditor should be able to see it, or anyone, any stakeholder, any regulatory agency, if they want to check, they can check it. If you don't have that trail in the system, then auditor will have to comment on this particular aspect as a negative comment. The whole idea is, many times fraud used to happen that the entries were getting recorded, and then just before the audit used to start or before the March year end, those entries were directly deleted from the system. So to avoid this kind of frauds, the new reporting requirement has kicked in. But anyway, I'll let Vikas spend more time on this. Now, new reporting requirements. So first of all, it's applicable to all the companies, including Section 8 companies. Foreign companies also it's applicable, and applies to standalone as well as consolidated financial statements. So the same rules which are applicable and which will be triggered in the standalone financial statement, when the same company, if it has got subsidiaries, associates, or joint venture, it will also prepare consolidated accounts. And in the consolidated accounts also, a consolidated financial report will be issued. In that also, this reporting requirement will trigger in. Okay, coming to CARO. Any questions so far? Otherwise, we'll then go to CARO 2020. Any questions so far on this topic? No, so it does not give any period. It is, so for example, the money is fungible, right? Now, if you have raised 100 crore, even after 1 year, 2 years, if you divert that, the reporting requirement will still kick in. There is no duration. However, if that, through the procedure, if it can be proved that 100 crore were utilized and then there was profit generation from the operations and those are then subsequently paid, then it may not trigger. But otherwise, there is no period defined. Yeah, so at times, if there is a long time gap, I agree, it would be difficult. If the time gap is short, it will be very easy, right? So, but still, first of all, in many cases, it will be very easy if the period is short or the amount, is directly, can be correlated. Otherwise, first, what you need to do is take the representation from the management, because finally the management has to assert that in the notes to accounts. After that, as an auditor, first you will assess whether that assumption is reasonable or not. And you will perform the procedures which you feel are required. So, if you, based on the procedures you performed, if you feel that, 100 crore which was borrowed, say in year 1, was already utilized over a period of 2 years in the business or capex or whatever reason, and the sufficient internal accruals has been generated, and from that the money has been paid, then this reporting may not trigger, right? Sorry. Yeah. Okay, so
For the project. One is for a project.
So if you have given the undertaking while borrowing to the bank, saying, either the fund will be utilized by me for my business or by my subsidiary, I can give it to my subsidiary also, and subsidiary also can be utilizing for the same business which they are into. Overall, the group is into the same business, then it is fine. But if you have not mentioned that and given the loan to subsidiary, then also it will get triggered. And not only subsidiary, so you may give it to a third party, then also the requirement will trigger it. Now, a good question comes up, so suppose if the holding company gives loan to subsidiary, the reporting will get triggered. Suppose if it is not mentioned at the time of getting borrowing from the bank or the third party, and if you're giving that loan to your subsidiary, in the holding company standalone accounts, the reporting will kick in. Now the question is, will it also be triggered in the consolidated financial statement while issuing audit report on the CFS? Now, there are two views. One view is, to say that the holding company and subsidiary company transactions are eliminated in the console accounts. And if there is no balance, the reporting requirement does not kick in. No, but the answer there is, still the reporting requirement will kick in because the reporting is on the compliance with rules and regulations. So even if there is no balance in the CFS accounts, but it is a non-compliance procedural, and hence the reporting requirement in CFS will still kick in. Yeah. Yeah. Sir.
For specific purpose, but it is not utilized for the specific purpose, then we have to report.
So not in this clause. The question is, if the money is raised on preference share. So first of all, whether only borrowing is required to be reported or any fund raised on preference or equity share capital. Answer is, it is not only borrowing. Even if raised on equity share or preference share capital, the reporting requirement will kick in. Now, this reporting requirement is only for diversion of fund. So if the fund is used or the fund is raised for purpose A, and then it is given to some other company, then reporting requirement will kick in. But if you have not given to someone else, you are utilizing for your own business only, but not for the purpose for which you had raised, but for some other purpose. That's your question, right? Then the reporting requirement will not kick in for this clause, but there is a separate clause in CARO where the reporting will kick in. Yeah. Okay. Sorry, sorry, what's the question? You can use the mic, sorry.
If the diversion of fund is not from company to company, but it is via media, third agency like NBFC or some other mode,
then also. So the reporting requirement says either directly or indirectly. So even if there are, say, 3 different companies you have kind of inbuilt, so you are taking a loan from bank, you are giving to company A gives to company B gives to company C. Finally, the money is with company C. Now you can't say that I have given money only to company A, right? No, even if the money finally flows to company C, it will still kick in because the requirement to report is either directly or indirectly. Okay. Yeah. Very true. So at times it will be difficult. So suppose, for example, if there is just one leg, it will be still easy. But otherwise, if the company A has given to B, B has given to C, then it is very difficult. I completely agree with you. But that's the objective and that's the aim, what government wants you to check. The entire reporting requirement has kicked in mainly because of ILFS, where there were multiple loans. The loans were taken by some other company, were given to altogether a different company, and were utilized by some other company only. So government wants to kind of stop all these irregularities. That's the main objective. Now coming back to your question, at times it will be very easy because you have taken a loan and the loan has been given to some X party, and that X party has utilized it. But at times the structure would be quite complex, right? In that case, you will have to perform the additional procedure. So one is, if it's a corporate, you can download the accounts from MCA. That is one, and see where the money is going. So if you have given to company B, you can download the accounts of company B to see where the company B has deployed the fund. At times, it may not be easy because, while you are finalizing the accounts, the company B also would not have finalized the account so far. They also would be in the process of finalizing the accounts. What do you do? In that case, you make the inquiry with the management, get their accounts, the draft accounts, perform the procedure, speak to their auditor. So see, the reporting requirement is twofold. One is you take the representation from the management. There are 3 clauses. So first 2 clauses, one is actually for the loan given, second is for loan borrowed. Both the clauses says first, based on the representation from the management, have you noticed anything? The third clause subsequently talks about any procedure as an auditor you feel appropriate. So more and more responsibility has been casted on the auditor. So just taking rep is not enough. You'll have to perform additional procedures what you feel necessary. Yeah. So this clauses about ultimate beneficiary is not in CARO. It is in the main audit report only. So even if the CARO is not applicable, still the reporting will kick in. Yeah. And not only that, so suppose if you have given a loan to a partnership firm, for example, where CARO is again not applicable, or even the Companies Act report is not applicable, still the reporting requirement will kick in. The objective is, if the fund is diverted. So if the fund is diverted, the reporting requirement will kick in. So first of all, you need to perform the procedure, but for whatever reason, you have done enough work which was required as an auditor, and still you are not able to comment, then you have no choice but to disclaim. But that will come at the last resort. First, you need to perform whatever procedures as an auditor you are supposed to do, reasonable procedures. But by XYZ reason, you are not able to perform the procedure because of limitation or because the management is not giving you the information, then either you can qualify or disclaim. Okay, good. So good interaction on, I think, this point. So, yes. Very true. Okay, so with that, I think we've completed the main audit report. Now we'll go to the CARO. Okay, so CARO, why it was kind of again revised in just 4 years, because in 2006 it was revised. Why so suddenly the government had to revise it again? So there were multiple reasons. One is, the Companies Act 2013 was introduced, which had many regulations about the loan, borrowing and everything. But somewhere one piece was missed out, which was evergreening of loan. So the loans were advanced by banks, financial institutes. Now, this were typically coming out of multiple scams related to ADAG Group, Reliance ADAG Group, Yes Bank, where the funds were borrowed, and just on the maturity, the company used to take loan from some other company or some other bank and repay the original debt, right? So it was evergreening. So to avoid this kind of evergreening, it was required, or it was felt that the auditor also should assess this kind of situation and make comment in the auditor report. The second is whistleblower and fraud. So Companies Act 2013 made it compulsory for certain companies to have whistleblower mechanism. And it's my experience, practical experience, that it's very difficult to unearth any fraud, but it's very easy when it comes in the whistleblower mechanism, right? So the companies which are required to have whistleblower mechanism, if it is instituted properly, if it is implemented properly, the many frauds will be reported. Now, as an auditor, the auditor will have to take cognizance of these frauds, right? And also has to assess the procedure regarding that and implication on the audit. So I think that was another need to make it compulsory for auditor to take cognizance of all the whistleblower matters. Third was going concern and liquidity mismatch. So going concern, now again, ILFS was a classic scenario, with more than 1 lakh crore of debt on the balance sheet. It continued for years, but suddenly in one fine day, the management thought will not be able to honor the loans, right? And suddenly there was a default. And once there is a small default, the collapse happened. I remember, speaking to one of the finance person working in one of the ILFS group company. that, general chat on the dinner table, saying, you have a loan of such a large amount. Don't you see as an issue? And he was saying, no, we have a good business, more than 1 lakh crore loan is fine. We'll be able to honor it. But now think the situation, right? Within couple of months only, the situation changed completely, right? And if there is a one default, the borrowers will come all together and you will not be able to find the liquidity to repay or honor those loans, right? So that was another reason. Corporate social responsibility. Now this reporting requirement has kicked in from the government under 2013 Act. And though initially it was voluntary, finally it was made mandatory. And when it was made mandatory, the government felt that, it should be, again, the responsibility should be casted on the auditor to check and report, so that there is more seriousness about CSR obligation by the corporates. Strengthening role of the internal auditor. Of course, when the organizations grow, there are 3 reviews happening. So one is management's own CEO, CFO certification about the policies and procedures they have performed. Second is stat auditor, who is doing the stat audit certification under the Companies Act. And third, which is very critical, is internal audit. Now, why the role of internal audit is so critical is, they are working with the management, right? And they're checking at a transaction level more and more. So it is not only true and fair view, but it is much wider. Now, as and when the organization grow, you need to have more and more strengthening of the internal audit system, right? And hence, this also was there initially. In fact, if you see the old CARO, 2003, that reporting requirement was always there. Somehow in 2016, it was taken out. And again in 2020, it is reintroduced. Loans and advances to related party. So this was another area where multiple loans and advances were given to related party. There was no checking whether these are arm's length or no. Forget about only interest part, but at times the loans were never repaid by the related party. And hence, to avoid all these irregularities, the government felt there has to be some provision in the CARO to take care of this particular aspect. And lastly, there were multiple audit resignation when 2013 mandated audit rotation mandatorily for specified class of companies, which is basically listed companies. And of course, private companies based on the borrowing and capital criteria. Now, when new auditor came, new auditor challenged the old position taken by the management, and that triggered multiple audit resignation within the term, before completing the term, which led to cascading effect on the secondary market. So that was also need felt that something should be there to kind of investigate more on this particular aspect. So these are all the reasons to kind of revise the CARO. Yeah. So very valid question again. The question is, I'm stat auditor. I'm auditing a company, and as per the criteria, the company is supposed to have internal audit function. Now, the internal audit reports are not submitted for all the quarters, or except it's submitted for say up to December quarter, but it is not submitted for the last quarter. What do we do? Now, as an auditor, you are supposed to take the cognizance of all the reports issued by internal auditor. Now, again, you need to specifically mention that in the CARO, right? By chance, so first of all, when you start the audit, at the planning stage only, you should engage with the management to have proper roadmap about the internal audit function, when they will report, what is the scope, how work will be spread across the year, when the reports will be issued. And for Q4, which is the last quarter, you should make it mandatory, for the management to issue in reasonable time after the quarter end, but much before your actual audit committee date. So you have sufficient time to go through it. By chance, if there is a delay, if it is not finalized or if it is not, signed off, I would suggest at least you should discuss with the internal auditor about what are the key findings. So, they may not have finalized the report completely, but their findings would be ready. So engage with them, engage with the management to understand what are the findings so far and whether are there any finding which will impact any caption of the financial statement. If the answer is yes, then again, you need to see how you basically take care of those red flags during your audit. But completely discarding Q4 report would not be right. As you said, because if you find some finding for Q4 subsequently after you issue the report, then there will be a big problem for you as a state auditor. So that would be, again, I would say, last resort. Try to first finalize the report, everything, So, see, this is a typical situation which used to happen practically for most of the companies. But when this reporting kicked in, auditors, stat auditors and management and internal auditor started engaging with each other at a quite early stage. So at the time of planning only, so somewhere when we finalize the planning for March audit, say in November, that time only we sit with the management, we sit with the internal audit team to decide the roadmap, right? And even if they are, say, issuing 2 months after the quarter end, for the last quarter, we insist you start work early, you complete the work early and give us the report. And even if the report is not available, give us a draft report or a draft finding. Now, I would say that is the ideal way of handling the situation. But by chance, if the report is not available for whatever reason, which are out of your control, then you are left with no option, as you said, to kind of, mention that comment in the CARO report. Yeah. Okay. Yeah. True. Very true. Very true. So in fact, auditing standard in the past were not allowing state auditor to rely on the work of the internal auditor, which has been changed. Now, as an auditor, as a state auditor, I have, under the auditing standard, I have a right to rely on the work of the internal auditor, right? So definitely, if I get the internal audit report, I can leverage that work. Again, all the firms, all the practitioners will have a different philosophy. So some firms will say for the significant or critical risk, I'll not rely. But some other, not a high risk area, I can rely. So it's up to the auditor to decide. But of course, auditor can rely. And if the reports are finalized by the internal auditor in time, definitely that gives a comfort. But if that report is not available, I agree with you. That comfort is then missing. And then as an auditor, the auditor will have to perform additional procedures. Okay, so some of these things actually I have already covered. But anyway, I think I'll go straight to the topic. So CARO 2020, it's applicable to all the companies except very small companies are now excluded. What are those criteria? So it says it's applicable to every company, including foreign company, except banking company, insurance company, Section 8 companies, 1% company, small company, and private companies within the threshold. So what are the criteria for private companies? Just here. First of all, the private company should not be a subsidiary or holding company of a public company. That's the first criteria. So if you are a private company, but you're a subsidiary of holding in subsidiary company, then you are out. Plus your reserve and surplus should be less than 1 crore. The company should not be taking any borrowing from bank or financial institute, which is more than 1 crore. And total revenue should not exceed more than 10 crore. So if all the conditions are satisfied, all are cumulative. If all these conditions are satisfied, then only CARO is not applicable. Otherwise, it's applicable. Subsidiary of a foreign company which is registered in India, right? Under the Companies Act, yes, it is covered. It is covered. Yeah. So, if you see applicability of CARO, small company is not applicable. Yeah. No, then it will cover. So whether it is a small company or private company, these conditions which are listed down has to be complied with. So if any of these conditions, whether it is a share capital 1 crore or total revenue of 10 crore, any of this is triggered, you will lose the exemption, even for small company. Yeah. Now, CARO statement as such is applicable only on the standalone report. It is not applicable to the report on the consolidated financial statement. If you hear, I don't know, I mean, some of those who are in the profession for more than say 10 years, you would remember in 2013, there was a different provision wherein CARO had been made mandatory even on consolidation. So we used to have a standalone report, standalone CARO report, and in consolidation, there was a full-fledged consolidated CARO report. Now, it completely created a mess, in terms of reporting mismatch, because if just think of a situation where a large company with multiple subsidiary, like 30, 40 subsidiaries, if it has CARO, each situation would be different and each auditor would have commented differently. Now to consolidate all this and make a new CARO, it's very difficult, and not only difficult for auditor or management, but even for a reader of the financial statement to understand the consequence. This time what the government has done is they have not mandate compulsory to issue a new CFS report, but has made a limited applicability. What it says is, if there are any adverse remark or a qualification in any of the CARO of the component team, then those particular clauses has to be cross-referenced in the consolidated report, right? You don't have to reproduce it. You don't have to kind of, copy the entire language and put it in your CFS CARO report. CFS CARO report will have just one clause, not again all the 50 clauses. It will have just one clause on CARO, and it will say that the auditor of XYZ component has issued an adverse remark on clause number Y or clause number Z. That's it. Then also. So exactly. So one company, small company, it's applicable. It's not applicable. But if they meet this criteria, then anyway it's not applicable. So these criteria are applicable to all the companies. Okay, maintenance of fixed asset register, revaluation of PP, property, plant, equipment, and intangible. That's the first clause. Now, this clause was there in the past also. The reporting requirement has been enhanced to say fixed asset register to cover investment property, ROU, and intangible assets, including intangible assets generated from business combination. See, what has happened is, in the Indian scenario, a lot of assets are getting generated through business combination, right? So typically, you would have plant and machinery or building as high value items in financial caption. But now when you have business combination, through large business combination, multiple, high values are plotted, or I would say are parked in intangible assets, whether it is customer right or whether it is, non-compete fee or something like, patent, copyrights, trademark. So those are quite critical and quite substantial. So government has recognized that, there has to be a proper control for this kind of intangible assets also, right? And hence it's very critical to have proper asset register displaying this kind of caption and having proper details about, what is the nature, what is the cost, what is the written down value. So one is fixed asset register now needs to be maintained, including all the intangible assets, which was not there in the old CARO. So your question is, the main document, the title of the goods or title of the property is in the company name, but the other ancillary bills are still coming in the different name. Will that have any implication on CARO? Is there your question?
I'm sorry. It's a legal document. It's a transfer document is in terms between the two family arrangements. It's not transferred, but it's in the family arrangement, which is in the court. But underneath the document which are coming, is it whatever?
Yeah.
So underneath that, the document which are coming like water bill, property tax, electricity charges, maintenance bills, a lot of things are coming in the different names.
Yeah. So the reporting under CARO is on the title of the property. So as long as the title of the property is in the name of the company, it is fine. However, as an auditor, definitely I would raise a question if the other bills, for example, electricity, water, or power, are not in the name of the company, but are not. But if the title is in the name of the company, then the property tax will by default will come in the name of the company, right? Okay. Yeah. So as an auditor, the reporting under CARO will trigger only if the title are not in the name of the company, whether it's on a registered agreement. If the registered agreement is in the name of the company, then it is fine. Now coming to a question about, other bills are not in the name of the company, there of course you should raise a question from internal control point of view, right? So not in this clause, but as a part of internal control, it might get triggered. Yeah. Yeah, so this particular clause under CARO is talking about immovable property. So as such, car will not get covered in this. But of course, if the cars are registered in the name of the director and not in the name of the company, then below FA schedule, fixed asset schedule, as a management, a disclosure would be required that these vehicles are recorded or registered in the name of the director in his personal capacity. Yeah. Thank you. So then the reporting will get triggered here. Yeah, then the reporting will get triggered. See, generally, this kind of situation where the cooperative society is not allowing corporate to become a member, or sometimes because of merger acquisition happening, the titles are still in the name of the erstwhile company. Those are not registered in the name of the new company for again multiple reasons. Either it could be just to save stamp duty. The company does not want to incur stamp duty cost. It's overall group company, they have a comfort, So all those cases will get triggered and will need to be reported under this clause. Now, it talks about all the immovable property. Now the question would arise, if the business of the company itself is to deal in immovable property. For example, if there is a builder or if there is the real estate broker where the buildings are the business actually is buying and selling the building. So buildings are kept in stock in trade and not in the property plant equipment. Will the reporting will kick in? There the answer is no. Now, if the properties are held as a stock in trade, then this reporting requirement will not kick in. Yeah, this reporting requirement will kick in if it is part of the property plant equipment. The requirement is not only for the property plant equipment or a fixed asset, it is also applicable for lease. So if you have taken anything on lease, right? And if there is no registered deed under company's name, still the reporting requirement will kick in. Think of a situation, something companies like which are into retail business or QSR business. Multiple shops or multiple stores are taken on rent for long-term lease, right? And those deeds are not registered in the name of the company. Now, if you're following Ind AS and you're creating right of use asset, right? This reporting requirement will kick in. Now, question would come, if the company is not following Ind AS, whether still the reporting requirement will kick in? Because if the company is not following Ind AS, what it simply does is, as and when the rents are paid, these are actually debited to rental expenses in the P&L, right? Again, if you see, there is no guidance in the guidance, not also, but if you take the same analogy of real estate broker, where there the reporting requirement is not kicking in because those are not held as a part of property plant equipment. Similarly, for companies which are not into Ind AS, right? If the lease expense are expensed out as and when incurred and no ROU assets are created, again, in that case, reporting requirement should not kick in. Yeah. No, so if it is demolished, right? Now, if there is a, so if there is a right to get it back once the redevelopment is there, then it is fine. Now, as an auditor, I would see whether it is reasonable time, within which I'm going. If suppose if the property has been demolished for last 10 years and there is no development happening, then I would raise the question of impairment. Exactly. Then I would raise the question on impairment. But if it's a reasonable time, then it is fine. Sorry, yeah. Okay, the next is on revaluation. So first of all, now under Ind AS, revaluation is not possible. It's possible only when the company is following revaluation model, right? If it's opting for cost model, revaluation is not applicable. Now, what the CARO is saying that if there is any revaluation which is increasing or decreasing, if the variation is more than 10%, then that valuation has to be by the registered valuer only, right? Registered valuer as per under the Companies Act. Now, then that reporting has to be reported in the CARO. So I think this is one which is critical bit, because at times the company used to take valuation from any valuer and do the valuation of assets and liabilities. So now that also, that mischief will be restricted. Okay, there is another clause on Benami property. Now, as an auditor will have to see if the assets are held by any Benami. No, so what is the definition of Benami? Benami means the property is owned or registered in name of someone who is actually not the owner, who has actually not paid the compensation. So now the money is paid by one person and the property is retained in the another name. In those cases, these are called Benami property and the reporting requirement will kick in. Here, no, so if you have 20 properties, right, you would have paid out of the company only, right? So, okay, so as an auditor, I'll perform the procedures which are required. The diligent procedures I'll perform. So if the consideration is not paid by the company, if it is not reflected in the bank statement of the company has done some malpractice and has kind of, on the title, right? Then again, I agree with you. I have, limited applicability in that case, but then in that case also, I'll make necessary inquiry with the management. I'll take the letter of representation. I'll ensure the diligence which is required from a person of a sound technical auditing knowledge, I'll perform and I'll ensure that, I've done those procedures. But beyond the point, I agree with you. If there is a fraud, at times it is very difficult. It cannot be detected. True. So only MR is not sufficient. Only management representation is not sufficient, and that has been held in multiple cases. Just by taking representation from the management is not sufficient. As an auditor, you need to perform the procedures which are relevant. No, so his question is different. His question is the company has not paid, but XYZ mean the company has title to the other properties which are not reflected in the books. So who sorry? Okay. No, I agree. So, that's why I think the auditing standard says, so I completely agree with you. And its main question on the auditing standard. So first of all, the basic principle about auditing standard is SQC1, right? Overall audit quality standard. And one of the criteria is also how you accept the client. So if you have this kind of doubt, you should not be accepting the client, So the internal control within the audit profession also needs to be strong. Within the audit company also needs to be stronger. Exactly. Very true. Because finally, it will be auditor who would be made responsible rather than anyone else, right? So you need to cover your risk, right? Fine. Yeah. So Benami property we have covered. Physical verification of inventory. Again, this clause was there. There are a few new reporting requirements which has kicked in. It says whether in the opinion of the auditor, the coverage and the procedure of verification by the management is appropriate. and whether any discrepancy of 10% or more in the aggregate for each class of inventory were noticed, then those discrepancies need to be recorded. Now, what is 10% of discrepancy? So 10% of discrepancy in quantity, in value, the answer is value. If there are differences in the quantity, which is say 30%, but those 30% discrepancies are found in a very small value item, say in loose screws and all, but value wise it's only 2%, then this reporting requirement will not trigger, right? Similarly, this reporting requirement has to be assessed for each class of asset. So for example, what are the class of assets? So raw material is one class, packing material is one class, work in progress, finished goods, traded product. These are the class of assets. So overall, you may not have discrepancy of more than 10%. Why? Because for example, in raw material, you have 30% plus, in FG value, you have 28% minus. So overall, the variation is not more than 10%, but individual class, the variation is high. It is more than 10%. Then also this reporting requirement will kick in, because the requirement is for deciding at each class of asset, right? So that is second. Third is, if there is perpetual inventory count, then in that case, how do you assess? So the guidance note gives the guidance there. So in that case, for example, if you have done monthly counts, right, then you take out the total of monthly counts and the discrepancies of those monthly counts. If that variation is more than 20%, more than 10%, then again this reporting requirement will kick in. Yeah. Working capital limit. Now, a new clause has been added, which says if you have taken any borrowing for working capital, by which you are mandated to file return. Now, those returns would be generally the quarterly returns. It could be monthly returns also, but the reporting requirement for the auditor is only on the quarterly return. Now, what used to happen is, in the past, the management used to fraudulently report anything to the banks or the financial institute from where they have taken the fund, because no one was watching it. No one was there to certify, right? So auditor will come at the end of the year, they will do the audit. But this monthly or quarterly statement, it was not required to be audited. Now you are taking a borrowing, right? You are supposed to give reports about your data, reports about your inventory on a quarterly basis. Now it's very easy for anyone to inflate the value or even deflate the value if it suits you, to inflate the value and report, right? Now with this reporting requirement kicking in, as an auditor, I need to see that the reporting requirement, which are filed by the company, by the auditee, are in agreement with the books of accounts. So suppose, for example, if the company is reported 100 crore of data, but in the financial statement it is only say 60 crore. If there is a difference of 40 crore, I need to bring out in the CARO report that the quarterly returns are not in compliance with the books of accounts, right? So this will reduce the fraud which are happening currently. Yeah, sorry.
This will also come that your long-term funds that are used for the short-term requirement. Similarly, short-term funds.
So that's another reporting requirement which will take it up. Yes, that's another reporting requirement which will kick in. But as of now, this is only on the quarterly return. Now, at times the banker would ask for monthly return also, or say, bi-monthly return also. Now, as an auditor, the reporting requirement is kicking in only for the quarterly return. So if there is any data which is wrong in monthly data, but not in quarterly data, again, auditor is not supposed to do it, because auditor is supposed to check only quarterly data, right? Typical question generally comes up is, for example, if there is audit adjustment found, which is pertaining to say either inventory or data and pertaining to earlier quarter, whether this reporting requirement will kick in. So for example, the company had recognized some sales which led to debtors of 100 crore in December. Now December is over, March is over, audit starts in May, and in May audit, you as a auditor, you pointed out that this revenue recognition itself is wrong. Revenue in this case should not have been recognized in December, but it should be recorded in June, because the customer is acknowledged in June, and the contract says only when the customer acknowledges, you are entitled to recognize the revenue. In that case, the reporting to the bank has gone in December with that inflated balance. Will it require a reporting? answer is again, it will depend. If it's purposely done by the management, if it's intentionally done by the management, then of course, yes, it will require. Yeah. So again, there is no specific yes or no answer. It will depend upon the situation in each case. So if you feel it's done fraudulently, it will trigger a reporting. Yeah. Sorry, what is the question?
I'm saying is that I being an auditor of this auditing company, I am required to report that in Q1, Q2, Q3, Q4, these are the numbers. The party has reported to their respective bank numbers other than this. So, and I have not reported to the bank the numbers which are ought to be in the record. So what is the penalty on the auditor not making this mistake?
So you're saying the company has manipulated the data,
yes,
and as an auditor, I'm not brought out in the audit report also. No, so then it's a wrong report, right? And then the disciplinary action can be taken by the institute. So now see again, there are multiple reviews happening. So not only the institute, even the NFRA is kind of, going through the files. So if they find anything, NFRA can take action. Institute can take action. It's very easy now, even for the lender to sue the auditor. So till now, there was no reporting. Now, suppose if the fraudulent data was given, fraudulent data is given to the banker would realize after say a couple of months that, the data which is given by the company is wrong. And he'll definitely refer in the CARO report whether auditor has brought out this separately. If he finds auditor has not brought this out, he will also sue the auditor. So the implication could be, exactly. Yeah. I completely agree with you. So if you go by the requirement, it does not say the intention should be fraudulent. It is my interpretation, but I'll tell you, at times, genuinely, there could be difference of opinion between the auditor and the auditee. And because of that, the company would have taken a different view. At that time, it may be gray area. But if it is done fraudulently, then it is out of question. Then it is completely dark. Then reporting definitely will require triggering. Yeah. Yes, I agree with you. I mean, you can take that view also, because the standard or the CARO does not say with the intention or not. Yeah. True, very true. Very true. Only thing what I want to highlight here is there are little gaps, or I would say the wording in the CARO and wording in Schedule 3 is little different. So if you see, similar reporting requirement is there in the Schedule 3 also for the management to report. However, the CARO reporting is only for the working capital, whereas Schedule 3 reporting is for any loan. So any loan which is even not for working capital, otherwise, which requires quarterly return, then also the reporting requirement will kick in. And here for CARO, the limit has been set at 5 crore. Under Schedule 3, there is no limit. So these are the two differences between the CARO and Schedule 3 requirement. Yeah. Again, the borrowing covers both fund-based and non-fund based. I think that is fine. And what is critical is the limit of 5 crore. Now, if you have taken the limit, even not utilized it, then also this reporting requirement will kick in. It is not like, for example, at times the company will just tie up for the borrowing, but it actually may not withdraw. But still they're supposed to file the quarterly return because the sanction limit has been sanctioned. In that case also the reporting requirement is triggered, right? The actual utilization is not compulsory. Then no. Then no, not for CARO, but for Schedule 3, management will have to kind of give the disclosure. Then also the reporting requirement will kick in. And again, the limit is for both fund-based, non-fund based in both the cases. Okay, the auditor is not required to do quarterly, that we have checked, covered. Okay, the main clause, investment guarantee, loans and advances, right? I think if you talk about what are the big changes in the CARO, I think this is one of the main clause which has far-reaching impact. What it says is whether during the year the company has made investment, provided guarantee or security, or granted loans and advances in the nature of a loan, secured or unsecured to companies, firms, limited liability partnership. If so, whether during the year the company has provided loans in the nature of loan, give the name, the aggregate amount given during the year and amount balance outstanding during the year. One is this clause is not applicable to the companies which are in the business of giving loan. So to NBFC, this is not covered, right? But again, not all the clauses. So there are a few sub clauses which are getting triggered, but some of the clauses for NBFC it's exempted. Now, reporting loans and advances in the nature of loan, guarantee, security provided to all the parties, as against earlier CARO, which talked about related party. So now the scope has been extended to cover all the parties and not only related parties. So that is the main change. Okay. Subclause A and E are not applicable to companies where the principal business is giving loan. However, other subclauses are applicable that we discussed. The requirement is to give the gross amount of loan given. So for example, if I am giving a loan of 100 crore, that party is repaying after 6 months, say 100 crore. Again, the 100 crore has been disbursed as a loan. The question is, if the loan is given and it's also repaid during there, will it require? Answer is yes, it will require disclosure here. With outstanding will be 0. But even if it's given repaid multiple times, then the gross amount of disclosure will kick in. Loan given either in cash or in kind. So at times, you may not give in cash, but you undertake loan of the other party by taking a borrowing or by giving acknowledgement to the borrower. So suppose, for example, if company A has taken loan from bank and company A is not honoring that borrowing on the due date, basically A says, instead of me, this company will make the payment. In those cases also, when you take up those loans or responsibility of those loans, that also will get covered because finally either it is cash or kind. Even the guarantees are covered. Now, apart from this, auditor also will have to comply with section 185, 186, all the section 189, which talks about multiple other provision. For example, if it's a loan given, whether you are within the limit as per the Companies Act, that is one. Second thing, if the loan is given, the rate of interest is as per the Companies Act, which is based on the duration of the loan and government of bond rate. Yeah, sorry. So outstanding loan so basically this clause talks about the loans taken during the year. However, if the outstanding loans, if there is a default, there is another clause. For the default, you will consider the old loans also, earlier loans also. Yeah.
So what verification I should do? Whether that disclosure has taken place in Y also and X also?
So, yeah. So this disclosure covers both. It covers loan given, also guarantee given. So the company which has given loan, the auditor of that company will talk about the loan given. The company which has given guarantee, the auditor of that company will disclose the guarantee given. So in both the company financial statement and in the CARO report, there will be disclosure. Now, another question is, when we're talking about loan, it also talk about advances in the nature of loan. So what does it mean? So if there are supplier advances, will you cover this in this? Answer is, it again depends. So if there are normal trade advances, which is, generally commensurate with the industry trend, then it will not get covered. But if the advances are in the nature of loan, then definitely it will get covered. There could be a situation where, just to kind of take goods worth ₹1 crore, you have given advance of 5 crore. So to that extent, 4 crore is definitely a loan. Or it could be another situation where generally the credit period say works on advance, but the advance is generally given only for 2 months. But you have given advance for 1 year and the goods have to come after 1 year, right? In that case, if you have given for such a long period, then again, this is advance in the nature of loan. So it depends upon the both reasonableness of the amount as well as the period. Yeah. Okay. The second clause talks about whether investment made, guarantee provided, security given. The terms and conditions of the grant of the loan are not prejudicial to the interest of the company. Right. Now, how do you decide whether it is prejudicial to the interest of the company or not? So, you need to go through the underlying contract. You need to see all the underlying conditions. What is the rate of interest? If the rate of interest is prejudicial, of course, the reporting requirement will kick in. Whether the amount is secured. So suppose if the conditions of the company to which you have advanced loan is not sound, is not financially sound, then whether those guarantees are taken from that also would would be a valid question. So if it is not, you will trigger. Again, this is applicable to all the companies, including companies like NBFC, whose principal business is to grant loan. Now, this is the same question, I think, which you discussed, whether during the company, whether during the year only, or whether any loans and advances given in the past will get triggered. So answer here is, if there are loans and advances given during the year, then only this clause will be applicable. However, there are sub clauses which talks about default. So in that case, when you are reporting about the default, that would be applicable to any loan in the past also. Because if you take a very narrow interpretation that the loan also should be given in the current year and default also should be there in the current year, then the intention of the government is lost, right? So the idea is, for reporting under clause of default, you will also see any loan given in the past, not only loan which are advanced in the current year. Yeah.
But charges is not charged to the group company. Is it prejudicial to the interest of the company?
So
it's a common
again,
issue in the
again depends. So why you're not charging? If there is a proper reason justified as to why you're not charging the guarantee commission, then it is fine. But suppose, for example, if it's a 100% subsidiary, right? And there you are deciding a view that, anyway, it's a 100% subsidiary, I'm not charging. Probably it is justified. But if it is a completely independent party, and you have just business relationship and still you're not charging, say another group company or other promoter group company, then you need to justify why. If there is no proper justification, then it would be prejudicial to the interest of the company. Generally, even if you're charging guarantee commission or not, by giving guarantee outside the group, when I'm saying outside the group in the sense outside the holding company, subsidiary company, if you are giving guarantee by itself, it will raise a red flag. Because unless and until your business is giving guarantee, if your business is, say, manufacturing something and you are giving guarantee, that itself is a red flag, right? So if you are not giving guarantee, if you're not charging guarantee commission, I completely agree with you. You should raise that question to the management.
Generally, it is within the group companies only, but there will be not 100% subsidiary. Family members are in one company and other company. So
so then again, it's difficult. So if you are, if it's 100% subsidiary, then I agree, because finally all the economic benefit flows to the holding company, right? But if it is not 100% and there are minority stakeholders also there in the company, then you should charge guarantee commission. If it is not charged, or if there is no proper justification, then it is prejudicial to the interest of the company.
Thank you, sir.
Yeah. Okay. Evergreening of loans and advances. So that we discussed, why this provision was brought in. So which says, whether any loans and advances in the nature of loan given have been renewed or extended on the maturity, or has been kind of, settled without paying. If yes, specify the aggregate amount of loan renewed or extended or settled by fresh loan. This is again not applicable to NBFC. Now, basically what it says is, on maturity, if you are not honoring your commitment and you are taking a fresh renewal from the bank. So on maturity, you are going back to the bank, you are getting a renewal letter, and without paying, you're continuing. Those reporting, then in that case, reporting will trigger, right? Now, this clause is not applicable to NBFCs. Now, again, there are a few question marks. If ideally, this should be applicable to NBFC. Why this is not applicable to NBFC? Where the principal business is also giving loan. So if there are any evergreening happening, those are the companies which are mostly impacted. Then why the intention of CARO is not to cover this? Again, there are two thoughts to it. One is, if you make this applicable to NBFC, the volume will be, sheer high. You can't, there will be multiple things which get reported here. That is one. Second thing, under RBI, there are separate set of rules governing NBFC companies, right? So RBI is anyway monitoring this separately. And that's why, that's the intent that, since let's not have a duplication, let's have NBFCs outside this purview. Okay. Auditor to consider loans falling due as on the balance sheet date, which were renewed or extended or settled before the audit report date. So anything which is kind of, getting due and subsequently before the audit report date, if these are renewed, then also the reporting requirement will kick in. Again, about company's auditor and amendment rule 2021, which we talked about ultimate beneficiary, that also someone helped to assess whether reporting will kick in there also. Very simple case, for example, January 21, loan was obtained for ₹100, which was repayable on September 21 with interest of 10%. On September 21, the total amount due is 105, and entire amount of loan is converted, the interest is converted to loan, and then the entire 105 is given as a fresh loan, right? In that case, this reporting requirement will kick in. Okay. The other few clauses which are applicable regarding loans and advances is, in respect of loans and advances in the nature of loan, whether the schedule of repayment of principal and payment of interest has been stipulated, and whether the repayments or receipts are regular. Now, this clause was there in the CARO 2006 also, or CARO 2003 also earlier. Only thing is, the scope has been expanded further now. Earlier, it talked about employees. Now, it talked about any party. So, any loan given to employees, which was anyway covered, but any loan or advance other than employee was not getting covered. So now any loan, whether it's employee or otherwise, will get covered. So that is, I think, main expansion of the scope. And if the amount is overdue, state the total amount overdue more than 90 days and whether reasonable steps have been taken by the management to recover this. The above two clauses are also applicable to NBFC or the companies whose main business is to give loan, right? Now, if you read the guidance note, it says, you need to give party-wise breakup also. So for NBFC, I think this has put a big challenge, because for NBFC, again, this kind of defaults would be quite voluminous, right? And now, after that, representations were made to authorities to kind of exclude NBFC from this scope, but it has not been done. Now, practically, how NBFCs are reporting is, there are two challenges. One is not only the volume of the data, which is volume of the data is quite high. Second is also confidentiality, right? Under loan agreement, the NBFCs would be under compulsion not to disclose name of the companies who are in default, because finally it's all the confidential information. Now, how practically the companies or the auditors have reported in this case is they've given the full amount and full amount of default in terms of value and number of transactions without giving further breakup. Because if you see the requirement of the CARO order did not talk about party-wise detail. It is only the guidance note. But if you see the order, I think it's quite clear. Acceptance of deposit. Again, this clause is there since, I think quite old time, I think in 2003, 1988 also. So no change as such, but only thing is, the dim deposit also is added now. So what it says is, in respect of deposit accepted by the company or amounts which are deemed to be deposit, whether the directions of RBI and provision of section 73 or 76 are complied with. Now, what is dim deposit? So dim deposit is any deposit which is deemed to be deposit under the Companies Act. So if your company is taking a normal deposit from retail investor, it's a fixed deposit which is taken, and then the company is accepting deposit. Private company is not supposed to accept deposit, right? However, there are few deposits which are otherwise not deposit but are regarded as deposits. And the classic examples which are given under the rules are any advance which remains unsettled for more than 1 year. So if you take any advance from your customer, right, and that advance remains for more than 1 year, it is not settled, then that advance also is regarded as a dim deposit, and these rules of deposit rules under the Companies Act would be triggered, and the CARO reporting requirement also will kick in. Statutory dues, again, more or less it has remained same, except the GST has been introduced now. So earlier on the old CARO version, GST word was not there because it was not applicable. Now, after GST introduction, that amendment which was necessary has been done. Only change which is critical is there were multiple clauses and the statutes were defined in each subclause. Now, there is one clause about depositing regular all the dues in the year. So there are statutes which were defined. Subsequently, there was one more clause which talked about any undisputed amount for more than 6 months, right, which is not paid. There, the wording which were defined were all the statutes which were defined, but without writing any other statutory due or any other government due. Now, this has been introduced now. So earlier, some of, for example, some municipal authority tax were not paid on time for more than 6 months. Those were not reported, but now each and every due, which is statutory due, will get reported in this clause. Undisclosed income, whether any transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year in the tax assessment under income tax, then that reporting requirement will kick in. Now, what it says is, if there is the voluntary disclosure or voluntarily disallowance by the company, then this reporting requirement will kick in. If the assessing officer has kind of adjusted any balance, then this reporting requirement will not kick in, even if though it is not contested by the company, right? There are a couple of other subclauses which would be relevant in this case. If there is undisclosed income, the auditor will have to also link with the other clauses. For example, is it a fraud by the management, right? If the company is voluntarily disclosing some income now, which was not disclosed in the past, does it mean it requires a restatement if the company is following Ind AS? Does it mean it's a prior period item if the company is not following Ind AS? Right? So those questions, those red flags, auditor will have to deal with. Repayment of borrowing. Again, this is a new clause which says whether the company has defaulted in repayment of loans or other borrowing, or in the repayment of or in the payment of interest to any lender. If yes, the period and the amount of default to be reported in the format below. So the order has also given the format. What it says is the nature of borrowing, name of the lender. Now, detail of default is required to be reported each lender wise, provided it is the lender is bank, financial institute, or government. So the entire lender community has been divided into two parts now. One is the lender of which are like banks, financial institute, or government. If there is any default to this category, the company has to give, or the auditor of the company has to give the full detail, including the name of the bank or name of the government institute to him or to whom the funds have not been paid on time. The other categories, other than this, banks, financial institute, and government. In that case, if it's a general category, then you just need to give the amount and the nature of default without giving the detailed breakup. Yes, if there is any default, yeah. It's a. So if there is a default, yes, it will require a mention. Now, before the year end, if it is kind of made good, so for example, in our case, so December something was due, it was defaulted, and after a few days it was paid. Or otherwise also, say for example, there was an application made to kind of waive off that delay, right? You may not qualify, but those facts still need to be brought out clearly in the CARO report. Yes. Yes. Okay. Okay. Borrowing needs to be considered on the basis of legal form. So again, this is very critical. At times, what happens is, now this is very confusing because there are few set of companies who are following Ind AS, and they will have a different set of balances only altogether in their balance sheet as borrowing. Something like preference share. Preference share is basically a share capital, but under Ind AS criteria, it would be a borrowing, right? Here, under reporting for CARO, it will be the legal form and not the accounting form, right? So you'll go by the legal form and you will report by the legal form. So you'll basically disregard the accounting which you have followed under the Ind AS criteria. Again, this is applicable to NBFC. So if there is a voluminous transaction, the auditor will have a challenge in terms of reporting under this clause. This also talks about willful defaulter. If there is any willful defaulter, then there is an additional reporting requirement which will kick in. What is willful defaulter? Willful defaulter has been defined in multiple criteria, but broadly it says even if the person has money, but in spite of having money, it is not honoring the liability. It is not paying the loan. So that is one. Second is it has diverted the fund for some other use. So for example, I have borrowed for working capital and I've utilized that money for real estate. In that case also, I can be regarded as a willful defaulter. Or I have diverted the fund to another party. In that case also, I could be a willful defaulter. In that case, there are, the reporting requirement as a willful defaulter will kick in. Only thing is, if the company has received notice, right, and management has, kind of presented to regulatory authority its own fact, saying, should not be classified as a willful defaulter because of XYZ reason, then in that case, that facts have to be brought out in the auditor report.
Authority notice. Say for example, my client has purchased material for in each company and the GST charged by the seller. Now, unfortunately, the seller has not deposited the GST to the GST department, and there was a anti-evasion notice to my client. And when we contact their revenue authority told us that you are liable to pay this GST, CGST, because your party has already got the number cancelled and now it is your liabilities. So we come to know, we calculated the amount came to 45 lakhs. Now party says, I have already paid to the parties. These are the proofs. But the anti-evasion department say, तुम दोनों आपस में मिले हुए हो, उसे हमको मतलब नहीं है, हमको तो मतलब है टैक्स आया कि नहीं आया, तुम्हारा पार्टी ने वो भाग गई, not traceable. Now you are liable to pay. In this situation, the client says, I will contest. Now it is a whether we will consider is a willful default or we should put a note and complete our formalities.
In this case, I would not say this is a borrowing from the auditee point of view, because finally this is not money borrowed and hence willful by the. So I would say, then the reporting will trigger in the statutory due clause, because finally this is a due which is raised by a regulatory authority and which is contested. So in that, the reporting requirement will kick in. Short-term fund used for long-term purpose. Again, this clause was there in earlier CARO. It was kind of removed and again brought in. The whole idea is, as an auditor, it's the moral responsibility of the auditor not only to comment on true and fair view, but also if there are any red flags in terms of liquidity, then this has to be brought out to the stakeholder. So what it says is, if the funds have been borrowed on short-term basis and have been utilized for long-term, if yes, the nature and amount to be indicated. The idea is, if you're borrowing for short-term and utilizing this for long-term, when the short-term funds which you have borrowed, when they become due, you will have issue in terms of liquidity, right? In that case, there could be serious implication from the borrower, and that could pose a question mark on the running of the business, right? So those needs to be highlighted. Yeah. Again, here the auditor has to determine